Hey everybody, how's it going?
Good morning.
All right,
Good.
we're now live on the channel. Thanks everybody for being patient while we got set up here for the stream. I finally got my OBS studio working a little bit more smoothly so I can see chat as I'm recording.
Hell yeah.
If you guys wouldn't mind as you jump into the stream, please leave us a like and go ahead and subscribe if you're not already a member of the channel. It just helps out the algorithm and keeps you up to date whenever we do streams or any new DD videos just like this. And we'll go ahead and get started. So, quick update on all of the market activity lately. So far, the SPY is moving in a double top pattern, which it seems to be following through on. Overall, the much larger pattern appears to be a symmetrical triangle, which after a big downtrend usually implies continuation. So my expectations for the SPY are pretty bearish. Sorry, Boule. I know you're not happy to hear that. But I am anticipating
I think logical is looking
some
at
more downtime on the SPY. My expectations overall for the market are pretty bearish for those that are, not following me more regularly. AMC is looking really nice and strong, moving off of its 20 period moving average today. So a really nice bounce off of that 20 EMA on the 1 hour chart. I've been trying to focus more on trading on the 1 hour time frames just because it's a little bit more consistent with the technicals. 5 minute charts, it tends to be a lot of noise, especially on these high volume stocks, meme stocks, as they like to call them. We have a little bit of a jump in Biora today that came early on in the morning, just as I was setting up to take some additional positions. So I did get a few extra calls in Biora just in time. I picked up some Augusts for I think about $9 a piece, and those are the $1 strikes. Biora overall is starting to look really strong. It's set up this ascending triangle pattern recently. So ascending triangle is where it typically has a flat top. You have a horizontal line of resistance here. Get out of my way. So this horizontal line of resistance that you see forming on Biora with a rising lows. So you got flat highs and higher lows setting up on the chart after consolidating for a long period of time. So that's a pretty bullish setup. The breakout period would be somewhere above 76 cents. We've already tested this area multiple times, and this triangle only goes out till about the 15th of June. So, of course, options expiration. There's a chance that we can run earlier, and I did see that there was about 1,800 contracts of volume traded on the $1 strike calls for this Friday on Biora. Not too ridiculous since those contracts were only trading at about $1 or $2 a piece. But I mean, if you're feeling like YOLOing a few dollars, I mean, why not, right? It's $1 per contract on those calls. If you can get it for that low with the way that Biora has been setting up and the good news that they've been throwing out lately, it could run. It's possible. I just wouldn't bet too much on something like that. Honestly, for Biora, my strategy is just to keep accumulating shares, continue selling puts, and keep buying leaps for January of 2024, collecting more and more shares, just trying to average down on my position over time and keep accumulating. And then we got a few wild cards here. I'll go ahead and switch to BBIG here on this so that we can watch these 4 stocks that we're paying the closest attention to. BBIG, as I said before, I see a liquidity pool sitting at $1, and it does seem to be heading down in that direction, so it's kind of moving in line with my expectations. Now, this is not a bearish expectation. What I'm expecting is for BBIG to head down before a sudden spike, just a single wicking candle spiking down about 10% down as a shakeout candle to try and hit stop losses and to take out weak longs. Anybody that sees this candle, you should immediately get excited, because the next thing that happens when you have a liquidity hunt like that is after a major down spike. I'll bring BBIG up onto the main chart here to look at this. The things that you're looking for a liquidity hunt is you look for consolidation over a long period of time, typically with symmetrical or asymmetrical market structures. And BBIG's largest structure is actually going out for weeks at a time. So if we take BBIG out to several weeks since its IPO, notice how many times that BBIG has moved against the $1 price between December of 2019 till present. It's broken down below the dollar only twice, but that is therefore a significant area of price action. That's a major area of demand. And every time that it has touched that price, it's always gone on a run by at least 50%. In this case, it touched it the day it went to 99 cents at the low on the 6th of April in 2020. And the very next day, the stock jumped all the way up to a high of $3.54, just a single wicking spiking candle. And it traded up over the course of the next month, or 3 months, I should say, about 3 months here, doing the same exact thing, just slowly working its way back up to that price level before it eventually broke down again. And here it touched it again. It broke down to as low as 76 cents, and then 2 weeks later, it closed up 290%. So anytime BBIG crosses $1 is a time to get really excited. Even though BBIG has been really beaten down, like really beaten down, the patterns are consistent. And if you recall, Hudson Bay collected a lot of these on the way up back in January. So Hudson Bay was one of the big buyers that took BBIG up and brought it to most retail notice because of the institutional buying pressure. So anyway, what I was getting to is these liquidity pools. You can imagine that that every time the price touches these support areas, there's a bunch of orders that are sitting down below that price area. So whenever you get this, you end up creating a an area of support, but you also get a bunch of people that have stop orders down here, right? So traders that are looking at these significant areas of price action are looking to collect down below these price levels, and institutions are also doing the same thing. So institutions trade a little bit differently than we do because they have to fill massive orders to the tune of millions of shares at a time. So what they do, market makers in particular and brokers do this, they can see all the stop orders that are between our current price and all the way down here at this level. So what the institutions do is they will slowly work their way down and start to create significant price action that shows up as technical patterns like this descending wedge that we're forming here, right? So we've got a descending wedge forming on BBIG, and the price is working its way down over the course of the last several weeks down towards this price area of $1. Now the institutions are looking to fill a long order in this case. Now, right here, we see a double bottom beginning to form on the daily pattern. You can also see it on the 2-hour chart pretty clearly. You got a bottom here and a bottom here. Now, what can happen in order to fill these orders, or in order to fill their long purchase, they'll create this price action that looks like a descending wedge. And then they'll make it look like it's about to break out. And then you get a bunch of people that see this breakout, or they get in too early and they take a long position, right? And when they take that long, the institution marks out their positions and their stop orders and waits for that to accumulate. So most people that are trading like, normal day traders, they see these, say that the price broke out here, they set their stop order down below $1 or like 99 cents or something like that, and then they try to go and take like a 2-to-1 risk to reward ratio, and they want to collect it up at $1.17, right? That's a reasonable trade. Well, the market makers and the brokers know this. They see all of these stop orders. So the first thing they'll do is they'll wait for enough people to get long on the stock, and then they'll drive it through that stop loss and hit millions of stop orders all at once. Those stop orders then become market orders to sell. And the market maker is able to fill them down at the lowest price that they can get it to. The reason is because the stop order is only triggered once the price actually hits that level. And the price can be taken down even lower. So even though your stop might be at 99 cents, you may get filled as low as 90 cents if the price teleports, basically. So that's a serious problem for retail traders, because we may not get the best execution, and the market makers take advantage of this because they get better fills, they get more money on the spread, and they collect a whole bunch of orders down at these prices, and then they'll quickly take the price back up to the original level that it was at, recapture support, and then complete the technical pattern that caused everybody to go long in the first place. So anybody who was actually short on the stock, if they aren't paying attention, or worse, if they see the spike down and they're going, oh, yay, it's going to go down, and then they take a short position, and then the institution suddenly yanks the price back up on them, and then they hit their stop losses in the other direction. So the market makers really, really juke out the retail participants this way, and this is a process called liquidity hunting or liquidity clearouts. So this is what I'm looking for on BBIG, and it's what you should be looking for too as a swing trader. Ever since looking at this, I've been doing paper trades based on this technique, and man, it's been eye-opening, but also extremely cool and fun, because you see the orders happening in real time, and you're watching the institutions make these huge bets, and you can ride the wave with them. So that's what I'm looking to do. I'm going to place an alert and let me know when BBIG crosses that threshold. All right, and the key to taking a liquidity hunt and not actually getting not taking the wrong direction is you want to see when the liquidity spike happens, like see you get a big deep red candle down here. You don't want to take the trade immediately because it could be a breakout or a breakdown in this case. So what you wait for is to see the price recapture support within 10 trading candles. So if you're trading on the 5-minute chart, like so, if this is barcoding the way it is, it'll look like a big deep candle that drives it all the way down here. It'll break through that level of support and go deep below it. And then you want to see it recapture that support within 10 candles. So about 50 minutes in this case. If that happens, then you know that the institution was the one that drove it through there, and they're taking a long position to take the stock back in the other direction. And for short positions, for institutions that want to go short, they do just the opposite. Symmetrical structure, they carry it up to the top, drive it up through a certain level of resistance, and then take it back down, and then the stock just collapses over days and days and days. So that's what we're waiting for on BBIG. As soon as I get this alert at $1, I'm going to be looking to add to positions whenever I see that price bounce back above. And you can thank Susquehanna for the discount, fuckers. Let's catch up with chat. Okay, I see we got requests for Mullen and Revlon. We'll go ahead and get some of those out here. Let's do Revlon first. Revlon still bullish on. Got a it's in a bit of consolidation. It did break the bull flag that it was trading in over the last few weeks, but it's still consolidating in this range right now, so it may need a little bit of time. What is really lacking is just volume. I would say that Revlon is likely to set up a double bottom here at this rate, or possibly begin forming a new pattern. It's not really choosing a direction right now. So the setup is bullish given how much volume came into it and just sent the stock ripping skyward. But we need to see what happens here at this price level and for it to break $6 before we see continuation. So that's what I'm looking for. Oh, whoops. Why did I turn that on?
Hey, yo, TD.
Hey, what's up?
I'm about to get out these Tesla calls, man. I just wanted to throw it out there because people were, I was saying, I don't know if they were trying to.
Oh, snap. I'm sorry, dude.
Too, so. No, it's all good. I'm about to exit here in a minute. I'm up almost 200. So.
Wow. Nice, dude. Congratulations.
I was waiting for 700, but it didn't hit, so I had jumped in. But I'm about to get out here in a minute.
Well, that was okay. Fair enough. Yeah, good call out. Good call out, Boulay. Appreciate that. Tesla had broken down. Boulay, one of the mods here in Hell's Trading Floor, took a position while it was bouncing off of. It was just about 700, and that's good for a short term bounce. It seems to be getting some resistance here at the 20 period moving average on the 5-minute chart, which is a good. Given its pattern and given that Tesla is trading, it's trading around its 200 period moving average on the 15-minute chart. I think it is getting prepared to do a death cross on the daily chart. So if you look at the smooth moving averages, and I know that this is like a huge mess. Let me clean some of this up so it's not so messy. Go ahead and get rid of that inverse head and shoulders. So Tesla's got two things going for it. There's currently a ascending triangle on here with multiple bounces with higher lows and this flat resistance here. So it could be collapsing down to this price level, which is what I'm looking for. I'm looking for Tesla to hit 680 before I take a long position and ride it back up. Boulay's a bit more of a chaotic day trader. So he saw this move to the downside and an opportunity for a quick bounce. Looking at it here, I can see that it's formed, or it's starting to form, a 3 white soldiers pattern, which is a really nice reversal pattern. It's these 3 tall candles with small bodies, or large bodies, and small wicks. It's not a perfect 3 white soldiers pattern, but it's looking that way. So if you are a day trader, this is a nice pattern to look for when you're looking to trade a reversal. All right, we'll go ahead and get back to Revlon. I just covered Revlon. That's all good. Let's go review Mullen. Mullen is a very similar situation, in my opinion, to BBIG, where in the case of Mullen, we already had that liquidity hunt. So this is exactly what I'm talking about with Mullen or with BBIG. So Mullen did this. It went and started trading down to the downside, right? Big bull channel, right? And you got some excited traders that are looking to take a long position. Retail traders, particularly, very excited to take a long position. Hey, City Blaze, thanks for the $2, man. I'll check out GPro right after this. So Mullen's trading down in this bull channel, and most people see this bounce off of 95 cents and go, yes, that's the perfect time to take an entry. So they do, and they take their entry. They go long here when they see this big green candle, and they set their stop loss too tight. And then they go for, even if you're going for a risk to reward ratio of 3 to 1 or 2 to 1, whatever it is, this next candle, the very next 3 candles would have crushed you and gotten stopped out here below 94 cents. And then immediately after that, then they take it in the direction that you intended. And notice how it took several days, but Mullen kept going up and up and up and up. So now they're setting up this same situation here. They're getting ready to do it again. There's multiple liquidity hunts that happen throughout these low float stocks that trade with high volatility. So we're setting up a new area where we're likely to see some liquidity hunting, especially on the short-term time frames. So we've got this area here where the price has been consolidating. We've got this area of resistance. So we're trading in this range. I expect Mullen to bounce around in here for a little while, you know? Just kind of like doot for a while. Eventually, it'll start to look bullish. So people will be inclined to take a position to the long side after the next bounce. And then they're going to do it again. So as soon as you see it do this, big spike to the downside, and then a rapid recovery, and then launch back up to the upside. That's another example of liquidity hunting. That's what I'm expecting the market makers to try to do with Mullen this week. Just because the stair-step pattern is quite symmetrical in its setup. But we need to let the chart develop before we get too committed to that strategy. It's going to take us some time for that to. It's going to take some time for this chart to develop. So give it a little bit of time and see what Mullen does first. If it crosses down below and breaks down this ascending triangle, then it just means that it's going into consolidation. So be on the lookout for that. On the larger time frame, like the hourly, Mullen does appear to be forming a double bottom, which it just completed here on this latest move. So it's you get in true Trey spirit, it's George W. The setup does look really nice for this. So if it does follow this ascending triangle, then you'd see a breakout above $1.40, and we could rip up past 175. So you would probably trade the whole gap, honestly. You would trade the gap up to $2.20. So those are the possibilities with Mullen. It's too early to tell. Just keep an eye out. Okay. I see City Blades asking about GoPro. Never really traded GoPro. All right. Oof. Well, you have a descending wedge, but you have a lot of time for it to play out. So the downside to this is still pretty steep. It's also a bad market for GoPro's sector. So I don't expect their earnings to be particularly great. The only reason why I say that is because GoPro is a really expensive commodity item. Usually for people who travel and do extreme sports and stuff. It's kind of a low demand thing right now in this hyperinflationary environment that we're entering. I guess it's too early to call it hyperinflation, but it's not great, you know. Overall, GoPro's sold off pretty badly, and it's below its last support from the pandemic period. So this area of support, it's already broken below. So in my opinion, the next area that it has to go is probably $4. What you could see, though, with GoPro is you could see it start to bounce around or consolidate and form another inverse head and shoulders like how it did during the COVID period. It may not go this low. I would doubt that GoPro would get this low. It doesn't. It's a good company. They're still profitable. It doesn't make sense to me that they would be trading that low, but you never know, right? So I wouldn't take a position in this. It might even be good for a short, to be honest with you. Hey, Boulay, I'm getting some feed from your mic. Did you have something?
Yeah, I got a. I was just gonna throw in there. I got a sale order for Tesla at $12, and it got filled. Just threw that out there real quick.
All right. Okay. The ticker requests are starting to run away from me. Let me see what I can do. I'll have to be really quick on these. Let's catch up with a few of the big ones. All right, so Exella selling off pretty badly. We got we broke down below support and this liquidity pool that I had already marked out. It's a really small one though, so it's not really meaningful. Exella is just continuously getting pummeled right now, and I know that this is traded on the OTC exchanges, or not OTC. This is traded on the non-ATS markets with Citadel. So Citadel Securities is fulfilling all the orders here, and this is just so typical of any Citadel market-made penny stock. But it's just continuously going down in this perfect descending channel. It's honestly like too fucking perfect the way that this thing just moves down like this. It's been in this channel forever. We're going on what? We're going on like 4 months of free fall right now. So, in any case, I'm still bullish on Exella because they have they have great fundamental changes in their company. Their balance sheet is improving. They've deferred short-term to long-term debt, and they have a new contract for $136 million 5-year contract with XBP. So there's so many good reasons to invest in Exella. There's so many good reasons for the stock to move up. They moved to a new preferred stock, which is Exella P, and that one's performing really well. Their preferred stock is doing great. It's absolutely just running for the stars. But I don't know what's going on with the main common stock, except that I know that retail bought this one, so retail is getting screwed over, and Citadel is making the market for this thing. So I want to see, I want to see where Citadel's books are and find out why the hell they have such a grudge against this company's common stock. My guess is that it's because it's a meme stock that retail bought into, so of course it's selling off. Why wouldn't it, right? Maybe I'm jaded, but whatever. Anyway, I still see it can continue to move to the downside, but I can't help but be bullish on Exella. There's no reason for this. For its common stock to be detached from its preferred stock makes no sense. That's not something that typically happens. They'll have to reverse split this thing soon if they want it to stay listed on the NASDAQ. But they moved to preferred stock, so I don't know what their plan is. Exella could literally buy back the entire float for their common stock right now for $40 million. They could buy it all back right now. They have the cash. All right. T2 is another one that was called out by Kadud, the T2 Biosystems Incorporated. I don't know much about the fundamentals of the company, but there was news that a FDA granted breakthrough device designation for their Lyme disease detection test has gone through. So there was a nice big move to the upside about 4 hours ago. The setup is still really bullish, but notice that it's sold off really quickly here. they're taking this thing down to this liquidity pool here. I see this hammer candle starting to form here, which, nope, looks like they're taking it down a little bit more. It's a little bit early, but I would expect the price to hit here. I've already got an alert set for 15 cents. Reason why I'm doing that is I'm expecting the market to slam this thing down despite the good news. They're going to send this thing through 15 cents, and I'm betting that we can get fills as low as 14.50, but more likely at 14.90. So if you want to capture this and ride this to the upside, this is another stock to look for and practice liquidity hunting with. So that's what I'm going to be doing with T2. You guys do what you think is right. You can take a position now, but expect it to drop in the near term over the next couple of days at least. As soon as this thing crosses 15 cents, I'm going to be looking for that big spike to the downside and for the stock to just look like it's selling off for no reason at all. That's what I'm going to buy. Okay?
Hey, OTD, we got General Disarray requesting if you want to take a look at Bed Bath & Beyond.
Okay, certainly. Okay. Let's go ahead and take a look at BBBY. So BBBY. I did end up getting some calls for this one. Looks like it's entering into consolidation right now. It moved back down over the last couple trading days since it had that big move on, what was this? Is that Thursday? Yeah, Thursday. So this retrace, I see they're trying to take this thing back down just about to the $4.40 level. So if they end up dragging this thing down here, then I'm thinking they'll drive it all the way to $4.40 and then spike through this liquidity pool too. It's got the same exact setup. Since looking for liquidity pools and paying so much attention to them, like it, honestly, the chart direction seems so obvious these days. I'm going to be patient with BBBY. I do have a position, but it's a really, really, really small one right now. Like literally one contract, just in case it decided to keep running and then the price collapsed so quickly, like I couldn't even get out of the contract if I wanted to. So I'll be looking for this thing to break back down below $4.40. Of course, it's a Ryan Cohen company, so this one is also being targeted. Basically, anything that's a meme stock. You could say that meme stocks are bad companies, but like AMC's not a bad company. They've been trying to kill movie theaters for years. They just keep coming back, and now we're having record-breaking box office numbers. I'll go ahead and cover AMC while I'm here on the chart. The chart is looking like it's setting up another symmetrical triangle. So this is a bullish triangle since it began on a major move to the upside. It does look like it is teasing for a breakout right now, but if it fails here and drops below about, I'd say, $14.75, expect it to drop to about $14.30 or $14.25. You could probably get some fills nice and cheap down at this level and then ride it back to the upside. Of course, not financial advice as always. Like, you gotta make sure that you're reading the charts for yourself. But that's just how I'm reading the charts. If I were to take a position in AMC, it would probably be to either wait for this breakout above the triangle. So my breakout point would be like 14.95. So if I see it break 14.95, then I know, right? And if it doesn't, then I'll expect it to bounce off of this. Did I really misspell this? Okay. So we'll see how it reacts, but it's a nice setup. And I see a shoulder and a head forming here. If I were to take this off of extended trading hours, I could also see this honestly just as a regular triangle. It does look just like a regular triangle. It started to form a head and shoulders, which is interesting. You see shoulder, head, shoulder. They are making this look pretty bearish. So be careful. Hedge funds are still fucking with AMC. Don't doubt it for a second. It's still being messed with. Hey Timmy, thanks for the $5. Yes, I can take a look at Evofem. Much appreciated. Evofem Biosciences. Looks like it came down after this head and shoulders pattern played out. The shoulder extended out to this weird triangle, but it's still a head and shoulders pattern. So it gapped down after this, and it's still trading to the downside. But on the longer time frame, I see this triangle forming here. Oops. So this one you may want to just give some time. It's a very nice pattern. So it could bounce right here. Keep in mind, this is a penny stock, so even a few cents of movement can be an insanely profitable venture. Like 30% move on this. A $100 bet on this could make you $30, but a $1,000 bet can make you $300. It's just you know, play with only the risk for what you're willing to lose. I do know that this one is this one was a squeeze pick, and a lot of people are looking for a big spike in as a result of a gamma ramp, if I'm not mistaken, because this one still has options, doesn't it? I need to go and check that to make sure that I'm not completely full of shit.
Yes, there's a gamma ramp on it.
Thank you very much. Yeah, EBFM. Oh yeah, definitely a gamma ramp. Ooh, wow. Yeah, okay. I could see it. I can see it. Absolutely. Yeah. Yeah, the gamma ramp for July is pretty steep. For sure. August is better, though. August is better because what you'll have is a bunch of people rolling out from July. And honestly, it's so cheap. Like $10 per contract for the 2.5 strikes. It's a little bit far out of the money, though. I would really be tempted to just stick with $1 strike calls because you're in the money, and by purchasing in the money calls, you actually if the calls are sold to you as naked calls, then as long as they stay near the money, then they'll have to be delta hedged for immediately. This is a case where you can actually it's not something that's typically talked about, and I'm not encouraging people to do this because technically this is market manipulation, but something that can happen is if you have a huge surge of purchasing orders of in-the-money calls, and if the market maker who sold the calls don't actually have the shares to cover those, if those calls are deep in the money, it can cause buying pressure. Because in order to cover those calls, the market maker needs to either borrow the stock or they need to hedge it by purchasing. So if you buy a ton of in-the-money calls, you can cause a gamma ramp to just appear overnight, and that can actually put massive pressure on the market makers to start buying right away. Something like this happened with SPRT when the price had dropped down from about $10 to $8. A bunch of people decided that since the volatility dropped out across all of the in-the-money calls, they purchased a bunch of in-the-money calls between $5 and $6. And it caused the gamma ramp to get extremely heavy on the in-the-money calls, and almost immediately SPRT jumped back to $10, and it sent a whole bunch more out of the money calls in the money, and that's what triggered the delta hedging and the gamma ramp to take off. This wasn't anything that was, I think, done intentionally. Like, there was no way that this could have been coordinated by retail investors, but it was just one of those things that kind of happened because of the euphoric buying, and it was a really interesting situation. But by dropping the price, it allowed everybody a chance that was really bullish on SPRT to just start buying a ton of $10 strike calls, and a bunch of the wealthier whales bought a whole bunch of deep in the money calls, and the gamma ramp was already blown out massively to the point where there were so many calls written on the chain that there weren't enough shares of stock in existence to cover it. It was literally like 120% of the stock of the stock's outstanding shares was on the call chain by itself. And that caused a supply crisis. And that's why SPRT went from like $10 all the way to $53 in just a few days. It was wild. It was gotta be like the best pick of my life. I can't even take full credit for it. It was actually your boy Jay from Reddit that called it out to me. He pointed it out to me based off of my short exempt thesis. And I was like, wow, this looks really good. And I just went in on it. And the more I started talking about it, and the more I analyzed it, the better and better it got. And the gamma ramp got insane. Yep, it's a little bit of backstory on SPRT and gamma ramps. And yeah, if you buy in the money calls that aren't already hedged for, they have to be hedged immediately. As the theory goes, it's not certain, but that's the theory. Let's go take another look at. Johnny Shortslayer, you want to take a look at ITRM? Sure. Oh wow. This one already made a huge move. Is this like a 100%, 90% almost, 98% on the top? The volume is pretty much dying out right now. It's forming a pennant and it broke down. So if it doesn't re-enter this pennant, it's done. At least for now. These short-term plays, particularly like these penny stocks, the big move comes quickly, and then the stock dumps down over time. So the whale is probably in the process of getting out right now if this is a pump and dump. And that's what you need to be careful of. I would not touch this, honestly. It looks way too dangerous. Oh, it had FDA news. Okay. Let's see. Special protocol assessment agreement with the FDA. Reached an agreement for a phase 3 trial for oral sulopenem. I'm not even going to try to pronounce that. As treatment for uncomplicated urinary tract infections. That's good. I hate it when my pee burns. You can always use more of this kind of medicine. The agreement is on the design, endpoints, and statistical analysis of the study that will form the basis for Aterium's new drug application for oral sulopenem. According to the statement, shares went 25% higher as of Monday. I would watch it, actually. Right now, it looks like it's starting to drive down, so you may have a bunch of people that have been holding for a while that aren't watching the news, have no idea what's going on, and they're just like, oh, yeah, I made money, and just get out. But if it re-enters into this pennant, then yeah, you could try going long and see if it runs again. But I think this is probably one that you should expect to hold for quite a while. Reason why I say that is FDA is slow. It's going to take some time for them to make a move. The one thing that I do see you have in your favor, MACD is very bullish. It's about ready to cross on the upside with the MACD positive. The STC indicator has been red for a while now. It tried to go green here on this move to the upside, and now I see a big dynamite candle hitting it right now. So, yeah, that could be bullish divergence. If this thing was broken down just to get a better fill by some whale, they just shorted it to bring it down here and then get a better fill. It looks like they're getting it now. So if you're in it, I would set alerts and be ready to make a decision one way or the other. Because if it breaks down below 38 cents, like, you want to capture profit. But the way that it's looking right now, it could break out to the upside and keep going. As it is right now, having not taken a position, I'm not going to touch it because it's too risky for me. The risk to reward setup is not in my favor. I could be facing like a 40% drop in this thing in a day, you know? It's a nice setup, though. I'm not going to lie. It's a really nice setup. Congratulations if you're in it. Ride it out. Do what you got to do. If you have a large position, I would suggest taking some money off the table, you know? Capture at least your cost basis out of this. Okay. Catching up with YouTube chat again. Antonio17. TD, you're responsible for me being able to pay my rent a couple months at the beginning of the year. Thank you. Dude, that's awesome. I'm really glad I was able to help you out. I don't think I really did much of anything, but if you made a good trade, dude, congratulations. Are you still holding on to Tide or did you dump it? I never received any Tide. I never got any. So I can't be holding it. I can't even sell it. No, I don't have any Tide. I haven't received any Tide.
Speaking of YouTube chat, there is Big DWix who says a clip of or examination of SPRT success could help retail understand gamma ramps overall. I want to point them that there is a very, very in-depth thread on Reddit that TD kindly shared with everyone back last year, I think.
Yep. Yeah, that was that the one from your boy Jay, the person I referenced? You found it first.
Yes, I think so.
Yeah. Would you mind, Verde, just go ahead and dropping that in
Absolutely.
YouTube, in the YouTube chat, so that everybody else can see that? Because I'm sure that everybody would benefit from it. Your boy Jay is the individual who used my metrics and thesis to find SPRT. We've now worked it into Scourgebot to look for these things automatically, but it is still a bit clunky at the moment. Scourgebot works by through our Discord, and it has a set of commands that help us identify squeeze plays and gamma ramps, but it's still in its infancy right now. We're working on an application that will be kind of like Unusual Whales or well, basically like any fintech trading application, but we're going to be working it into a web application that people can sign up for, and you'll be able to use Scourgebot. And with that kind of platform, we'll be able to add in some new features where it can have it can call out a list of best picks for gamma ramps, and hopefully we can help retail identify those plays a lot sooner and get people in on winning plays like SPRT was. Because right now it's clunky because we have to search one ticker at a time and we have to do it manually and do analysis. We want to get Scourgebot up to a point where we can do all of that testing automatically, and it's just searching for these tickers just around the clock all night long, and it'll alert us anytime it finds them. All right, so Redbox, aka top most manipulated stock in the market. So Redbox has completed a shoulder on its Head and Shoulders. But what I'll point out to you is that every time that Redbox completed a Head and Shoulders, it ended up ripping, which is kind of funny. The only time where it actually did break down was here, and this is when they turned off options. They literally just took the options away and moved it to position close only. Redbox was an example of a SPRT style gamma ramp. The gamma ramp was so huge that it was threatening to break the stock's balance such that the supply would have been exhausted if all the calls went in the money. And that issue cause, I'm absolutely convinced of this, that the Options Clearing Corporation and the exchanges colluded to decide that they had to do something to prevent it from getting out of control again, and they shut it down. And they put the options to position close only because they knew that there was no way that there was enough options, or that there were not enough shares in the market to supply those options, and it was going to cause a squeeze. They killed it. I'm absolutely convinced of this. And now, because all of those options were position close only, they were able to pin the price, putting thousands and thousands and thousands of both puts and calls out of the money and expiring worthless over the last several months. Retail got royally fucked on this one, and I'm absolutely pissed. Please, if you're a lawyer that does any kind of litigation in stock manipulation, look at Redbox, because this shit was an absolute collusive mess that was done on purpose by market makers, the exchanges, and the OCC that colluded to shut down options trading because there wasn't enough or there were too many contracts to actually make any kind of sense. There wasn't enough shares in circulation to supply all of those calls. And if those had all gone in the money, everyone who sold those naked calls would have been absolutely screwed. And they knew it. They let it happen because they thought that they could fleece retail and get everybody to shake out of their positions, but they couldn't do it until they turned off the options. They put everything to position close only. That was absolute fraud bullshit. I want to see people in jail for that one. The exchanges did this in collusion with the clearing corporations. And I bet the market makers were involved too, because the market makers are the ones who sold the damn things. And this is a Citadel stock, by the way. The designated primary market maker for Redbox is Citadel. Citadel and Wolverine also, I believe. Let me go pull it up. I'm going to have Scourgebot go look it up for me. Redbox's designated primary market maker is not a number error. Excuse me? Because it got pulled off of SIBO. Interesting. Well, now I'm extra pissed. So I'm going to go and share all of this bullshit with you. This is the breakdown of volume for Redbox. You can see that non-ATS volume, aka dark pools, makes up 66. We're going to round that up to 66.6, or 2/3 of all traded volume in Redbox is going to dark pools right now. You can also see this on a weekly report, that this has been consistently the case. Since May, it was 40%. Ever since late May, it moved up to at least 60%. So more than half, basically 2/3 of the stock's traded volume is all going to dark pools. I would love to see what the hell Gary Gensler and the SEC are doing about this situation, because this is clearly an abuse of authority. This is clearly stock manipulation, pushing 2/3 of all orders on a stock that is mainly made up of retail participants who are only buying the stock for the most part. And all of that volume is going to a dark pool on a stock which is currently undergoing a big merger agreement with a company that wants to that wants to offer an exchange rate that converts a stock that was previously trading at $12 and drive the value all the way down to less than 80 cents. Tell me that that's not a load of bullshit. Somebody who's manipulating Redbox is obvious to me. I'm just waiting for any good actor, any good faith actor, or any enforcer, any regulator to do a single goddamn thing to help people. Like actually do their jobs and pay attention to whenever a blatant misuse of power is happening in the financial market. So pissed. So fucking stupid. All right. Anyway, let's go ahead and move back on. At the moment, Redbox is consolidating pretty fiercely here at between. We'll just mark it out here at the bottom of this range, $5 and $7. There's a huge support level, which is now going to be resistance at $7. So expect the stock to bounce around until it chooses a direction. If I were to guess anything, I would suggest I would probably guess that Redbox is going to go down. It's just probably going to continue going down, continue bleeding out. If you want to hold through it, then might I suggest preparing yourself for some pain and some downside. Expect the stock to continue trading to the downside, and this is my I guess my Damelin, thank you for the $30 as my copay for blood pressure meds. Thank you for the $30. That's very kind, man. That was so damn funny. It totally threw me off. My struggle with Redbox is because I know that they're going to drive the stock down, right? I know that that's what they're going to do. But I also know that in order for them to actually get hurt by this and actually pay for their fraud is retail has to keep buying no matter how low it goes. That's the only thing that actually works in these situations. And that's my struggle, is that if there's not enough retail participation, then I'm just encouraging people to bag hold. And that makes me an asshole. But if I don't talk about the actual situation that's going on and people don't buy enough of it, then I'm also participating in some way in the fraud just by being negligent or at least not recognizing the fraud. So I'm stuck in this between a rock and a hard place where it's like I know that if we buy, we're going to get hurt. But if we don't buy, then nothing's going to change. That's where I'm at with this stock right now. And since you can't buy options anymore, you can't hedge. They took that option away from us. We're not allowed to hedge our bets with puts and calls. So our ability to protect ourselves we've basically been cut off at the knees, you know? The only positive aspect of this is that now any purchasing that goes to the exchanges, which unfortunately is less than 30% of it, as you've already seen, is that purchasing will only go through shares, not options, and therefore that can cause the price to lift. The other thing that is also a factor here is that there are still options, right? There's still options that exist. People still have calls that they purchase for like months away. They've purchased them for August, October, September, and those are still valid call options that could go in the money. And if they do, then that can contribute to a gamma ramp, but it's not going to be what it was. So Redbox is, I don't know, like if I call the play over, then I'm probably making it a self-fulfilling prophecy because too many people listen to me, and I don't want it to be over, but I also don't want to get married to a stock. It's a really tough place to be. I'm just mainly pissed off because this was a blatant act of misuse of power, and market makers, exchanges, and clearing corporations colluding to fuck over an entire class of investor all at the same time, and they were okay with that. And nobody at FINRA, the SEC, or the fucking or the fucking clearinghouses thought that there was a problem with that. And none of them took notice. None of them even gave a shit.
And to interject in a not so harsh, fucked over way, can we touch on the issues that we're having in Discord with Patreon?
Oh yeah, I can absolutely do that.
I think it's just worth having the audience just to clear the air.
Yeah, that's a good point. So recently we had an issue with Patreon. I thank you for reminding me, Pew Pew. But we recently had a problem with Patreon where members who were not paying their subscription to the Discord were allowed to stay because the Patreon integration was broken. Basically, the bot was just not removing roles. So because of that, we had a bunch of people that were still here that they had been paying members, but for whatever reason they stopped paying. Usually because of like declined cards from like credit card expirations and whatnot, which it's not a big deal, but we had to try to fix it. And the and when I contacted Patreon to work out a fix for it, they said, "Oh, we've implemented a fix overnight. You should see the changes where like all of your previous members that weren't paying have been dropped." Well, what they ended up doing was they looked for anybody who had a username mismatch because they are not tracking Discord IDs. They were tracking usernames, which people can change. So anybody who changed their username, changed their nickname, or changed their discriminator, which is the little number code next to their username, they all got kicked. All of them. Everybody that ever changed their name got kicked out. So I've since screamed at Patreon support. They have not answered me. I think they're afraid of me now. So we're going to get off of Patreon. I'm working on a fix to get the hell off of Patreon as soon as possible because I've between finding out that they have been costing us money by not actually charging members who were more than happy to pay their subscription and thought they were paying their subscription and supporting the Discord the whole time, were not, in fact, doing that. And that's Patreon's fault. That's nobody else's fault but Patreon. And then Patreon decided that the best fix was to just kick everybody out without even asking me. So yeah, I am firing Patreon as soon as possible. But I do want to apologize to everybody who got kicked out. We see that we have a lot of members that were erroneously kicked out. We recognize that. If you got kicked out of the Discord, please just rejoin. You can jump in at discord.gg/Hell's Trading Floor. And I'll be able to verify your last charge on Patreon just to see that you sent a payment, and I can just manually re-add your role. Once we get cut over to a new solution, I'm going to be meeting with some third parties to try and get this set up tomorrow, and hopefully we'll have that fixed. So if all goes well, that will never be a problem again after we get after this next cycle. So next month, hopefully, we'll be on a whole new platform and no more Patreon. And honestly, the change is good for everybody because Patreon just don't seem to know what they're doing when it comes to managing Discord memberships. But yeah, thanks Pew Pew for the reminder. Okay. Okay, Robert Ledzinski. I see you're asking about Enjoy. I sent this out on a couple. Yeah, I sent this out several weeks ago. But Enjoy got delisted, man. They announced this. They announced this days ago. Like early last week, they announced that Enjoy was going to be delisted on Nasdaq. That announcement came on the 8th of July, and as soon as we saw that, we looked at Enjoy's response, and Enjoy said that they were not going to contest the delisting. So as soon as I saw that, I was like, don't hold on to it. And I'm sorry if you are, but Enjoy is done. Like, we got out of that play really quickly when that happened. And I'm really sorry for everybody that was still in Enjoy, but I tried my best to warn people what happened. And there's nothing you can really do about it. I am sorry. The bankruptcy notice was a great volatility move, and we were able to capture upside, but I did my best to warn everybody that these are extremely risky plays, that you capture a quick volatility pop and then you capture profits and get out. You don't stay in something like that. So I'm really sorry if people got burned on that. I'll try to do better about warning everybody and letting people know where the where the volatility move is versus potential. This is similar but not the same as the Revlon bankruptcy. Revlon's a recognized brand that's well known. They have a lot of options. They've got plenty of people that would be willing to finance them. Enjoy Technology did not have those options. They were deep in debt. It's not a recognized brand. They have a lot of issues with their liquidity, cash on hand. It was a very different situation. So because of that, you can't treat those types of bankruptcy notices. Like, you can jump in quickly to see if there's going to be like a sudden buying surge, and then you just capture profit and you get out. But for the other for recognized brands, it might be different. It's one of those situations where you really have to do your own research and figure out like what's the possibility that this company gets bought out or gets rescued from bankruptcy. Enjoy didn't have that. It didn't really have that possibility to get rescued from bankruptcy in that somebody would just offer them a financing deal out of nowhere. Revlon did. The one possibility I saw for Enjoy was that suddenly some big company would just swoop in and go buy them and be like, "Hey, look, they've got all this debt. We can buy that. We'll just scoop it up for a couple $1,000,000, and we'll have this new subsidiary company that we can use all their infrastructure and stuff." And that was my theory of what could happen. But as soon as I saw the delisting and that they were done, I was like, "That's it. I'm getting out. No more." And I let everybody know as best I could. I'm sorry for everybody who didn't get that notice. I'll try to do better next time with that. Okay, ATER. Got a lot of big moves. Ooh, inverse head and shoulders. Ooh, yay. That's exciting. If you guys don't see this, hold up. There we go. So you got an inverse head and shoulders beginning to play out. And that's nice. It's also a bit of a descending wedge also. So you got some possibilities here. It can go down a little bit further. So look to see if the inverse head and shoulders plays out. If you get a breakout above this 250 level, that's the big level. The neckline of this inverse head and shoulders is lined up with a descending wedge. So this has a good chance to break out here at this level. If you see this breakout, confirmation level would be a nice big green candle closing above $2.50 and another green candle to close above $2.55. Basically, if you get any strong closes or any strong patterns closing above 255, that's a buy signal. At least for me, that would qualify for a buy signal from me. There's an area of support down here that we're likely going to have to touch, so I'll be looking to see if it touches this and bounces. You can also use some smooth moving averages to give yourself an idea. On the 1 hour chart, we can see that we're just consolidating downward a little bit. It's interesting. It's actually quite it's quite consistent in how it's consolidating. It's very interesting. The stock is consolidating downward very consistently, and the moving averages are moving very closely together. I'm betting that if you get them really close together, kind of like how you saw here, we'll get some consolidation maybe, because this is what happened with ATER before its last run. It just consolidated, and the moving averages on the 1 hour time frame got really close together, and then suddenly you just had a pop out of nowhere. You also had a similar setup here. I'm looking at this pop and comparing it to this one. So you had this descending channel that it broke down below and then crossed above, and then you had a break back out of the channel to the upside. And then from that point on, it just ran. So set some alerts on this one and see what ATER looks for. Looks like it's going to do in the near term. My near-term signal would be for it to cross the neckline on this inverse head and shoulders. It is a slanted head and shoulders, so it's a bit tough to see, but just keep an eye out. Your support, the big support, is at $2.20. So if you want to take a position at a discount, you could try to get a fill at $2.20 or a little lower. Only do that if it works for you and if you're, extra bullish on the stock. Don't do it just because I suggested it. MACD is consolidating here very nicely. That's some nice consolidation. I do like this. The RSI is still doing lower lows though, so you've still got continuation down here. So see how it reacts to this price level. If it breaks down below 230, wait for 220, and then if you see that bounce, then you might have a chance. Ooh, did T2 just make a move? Yes, it did. T2 just moved. There it is. There's that liquidity hunt. This is what I'm talking about. Here's that spike. Now we actually get to see a liquidity hunt happen in real time. So this is the fun bit. Now we go down to the minute chart. And we're going to look for this deep wicking candle to break down and slam the price below this this liquidity pool. All right. So we're looking for them to just crush it, right? Big volume candle. This is the giveaway of a liquidity hunt. You got rising volume on the dissension, and they're going to send this thing down as far as they can to fill these orders. All right. Notice on the volume shelf, the near term, you only have selling pressure, only selling volume. Here we go. Here we go. Here we go. All right. Now the key to trading this is you wait for them to recover after they've touched the liquidity pool for them to recapture support. They're touching the alert that I set. They haven't hit the liquidity pool. All right. Now they're trying to sucker in a bunch of weak shorts. This is low volume, okay? This is low volume. Don't fall for this. They're trying to screw with people so hard, all right? Be patient, okay? It pays to be patient in this situation. You see these big green candles and you get excited. This is not the time to get excited. Just hold it up, all right? Hold it up. Okay. All right. So we're going to keep an eye. We're not going to listen to the noise. All right. We're not going to listen to the noise. We're going to look at the 5-minute chart. We're going to watch what this candle does. Okay. We're going to wait patiently for these candles to close. Don't ever trade on a candle while it's moving. It's a bad idea to trade on a candle while it's moving, especially if you're day trading with stop losses. That's how you get stop loss hunted so quickly. The other thing that I'll point out here is that we have a double bottom pattern, right? So how I'm looking at this double bottom pattern is I'm looking at the body of this candle with this deep wick. That's how I know that this is where their target is as well. So this classic double bottom pattern, you have the spike down and then a sudden shot up to the upside. There it is. I'm just waiting for this candle to close while I explain this. Now, what we're looking for in order to make sure that this is a liquidity hunt and not a breakdown is we're looking to see where this candle closes to make sure it does not close down here. You set 2 lines. You set one at the bottom body of the candle here, and you set one at the wick, okay? What you're looking for is for the candles to enter this area but never close in this area. If it closes below this line, that's a sign of a breakdown. Or if you're trading, if it's going on the upside, a breakout, right? We're trying to make sure that we are finding a liquidity hunt and for the stock to reverse in the other direction, as opposed to getting trapped in a long position that's actually breaking down further. All right. And that's why we be patient. We got to be patient watching these candles print. Let's go ahead and catch up with chat here. I'm way behind on everybody who had ticker requests. I'm so sorry. I'm so far behind. I want to keep up with chat as it's happening. So if you had a request before, I'm sorry. I'm just going to go all the way forward. Yes, I've talked about REV. I have not talked about GMVD. So GMVD, this one's actually looking nice and strong. It's riding the wave on this 20 period moving average on the 5-minute chart. On the hourly, nice bullish move. Okay. Now it's touching the 200 period moving average, so it may end up getting rejected here. We need to see the breakout here and get above the 200. Crossing the 200 will start to really get these moving averages to climb and consolidate. This is a nice move. This is a very nice move. The MACD is about to cross, so we need to see if the stock starts consolidating sideways like so as the MACD crosses down, then that's an excellent sign of consolidation. If the price breaks down following the MACD cross, then it's going back down to the 50 period moving average, and we're going to have to start over again. Okay. Let's get back to T2 because I want to track this trade. Okay. We got one candle close. It broke down to that 15-cent level. We don't know that they're done yet. We don't know that they're done yet. We got to wait and see. I'm going to wait and see and make sure that we don't get in too early. Don't get in too early. That's how you get rug pulled. Got to make sure you know the direction that they're choosing. Let's keep an eye on this. Okay, Exella. I did already cover Exella. Trading down in this channel, and it looks like it could go further below. I'm still bullish on it, and I still have my positions. I've got all my positions in Exella. I still think that this thing can rip. It's going to take some serious balls of steel from retail to actually push this thing, but I believe in us. Look at how low this volume is. Okay. Dark side trading. I appreciate it. HNST. All right. Just for you, dark side trader, I'll take a look at it. HNST. Okay, interesting. It's starting to set up a. It's trading below its 200 period moving average. Obviously, it's in a downtrend, pretty bad one. This thing was a recent IPO that got murdered. It IPO'd in May. Yeah, May of 2021. It's been getting slaughtered ever since then. It's got a nice consolidation and an inverse head and shoulders on it. That's pretty good. Technical patterns look good for a reversal, but it's not confirmed yet. You need to see that it's starting to trade above its 200 period moving average. Let's take a look at some of the other data. You said that it was institutions that were smashing it. Let's go and take a look. I gotta log into my Vortex. Give me a second. Okay. HSTN, was that it? Hanstein Holdings. HNST, sorry. HNST, Honest Company. That sounds like such a lie. The Honest Company. That sounds like Mr. Good Guy.
Yeah, it's the honest company, Trust me, bro. Industries.
Trust me, bro. Industries.
I'm actually very familiar with the Honest Company, as they are a premier leader in baby products.
Ah, okay. Gotcha.
So that's the diaper cream, wipes, all that kind of stuff, and they try to do it with as little additives and stuff in there as possible, so that your little one's hiney is just pristine.
Ooh, interesting. The days to cover launched skyward on the 2-week average. That's interesting. Short interest is climbing, but so are the share prices. Free float on loan is 2.5%, which is pretty modest, all things considered. I'll be patient on this one. Short interest is quite low, but well, 8.5% is respectable. That's quite a bit of short interest. Let me see. You said that institutions were crushing it, but well, let me see. What does the security lending volume look like? It's not that bad. Yeah, the utilization isn't really that maxed out either. The cost to borrow is pretty low. I'm not seeing institutions hurting it. Let me see. Who's got the largest? L. Catterton Partners has 13% share. Institutional Venture, 11.3. Jessica Warren. Why do I feel like that's a politician's?
You're thinking of Elizabeth Warren.
Right. I'm wondering if they're a relation. Just because I see so many. Jessica Alba? What? Really? Jessica Alba's an investor in the Honest Company? I could see it. That's funny. I'm sure it's no relation, but that's just hilarious. BlackRock and Vanguard both have shares of this. I'm pretty sure it would be part of an ETF, especially since they're share matching each other, and they both purchased only 1 month apart. Or at least
Jessica Alba is actually the founder, the actress.
Really? Oh, she founded the company. Oh, okay. Oh, cool. I didn't know that. State Street Global is in this one.
It's like the not goop.
Northern Trust, the Teachers Insurance and Annuity Association of America. You got T. Rowe, Citadel. Not for much, but Citadel's there. So Susquehanna. Yep. Of course, everybody's got something. Okay. I'll watch it, but I don't see it getting smashed by institutions right now. It looks more like it was overvalued for its IPO, and it's just like it just wasn't accepted by Wall Street for an IPO price. Maybe I'm misjudging it a little bit, but from what it looks like to me, it's just the company's share price wasn't accepted. Because the short interest isn't like abusively large. The other thing is we've got a series of bad earnings. Yeah, the company's losing money. The company's constantly losing money. So even if Miss Alba is was it Mrs. Even if the company is well structured, it's currently losing cash right now. The financials are probably not in the best state. What is their float like? A 46.7 million share float is not bad. It's pretty small. The earnings, as I said, not good. Their profit margin, it's slim. It's a slim loss given their revenue. It sounds like they have a lot of fluff here.
I was gonna wonder how any baby formula shortages, what's going on with that, and if that's playing into this at all, or could.
Maybe, yeah.
I can't remember if that got sorted out or if it's still going on, or.
Well, it's interesting. I will give it that. I'll just pay attention to the company. I'm not going to say one way or the other what whether to invest or not. I don't see the case that institutions are crushing it though. I just think that the price is just not being accepted and it's just going lower naturally because the company's losing money. It's honestly a pretty steady downtrend. There's not really a case of manipulation here that I can see. There's not like a massive surge of short exempts. There's not like constant stop loss hunting from what I can see. All of the moves to the downside are on really bad earnings. It seems like pretty natural movement to me.
Would you say honest movement?
I would say honest movement. I would say honest movement. Sorry, Dark Side Trader. Oh yeah, no man. Appreciate you. It's good for a WL big move to the 200 EMA daily. Well, what I can say is that just based on what I'm seeing here is that it's consolidating here. It's been in this price range for a while. It's a 30% swing either way though, so that's quite a large area of consolidation. That's a big range. The only other thing that I do see to your benefit is on the near term, on the daily, it's set up this ascending triangle. You got an ascending triangle here. So that is good. That's a good setup. So if you're looking to play this for a reversal, then a breakout at this price at $3.40 absolutely could do it. Looks like it's selling off pretty badly today. It's down 5%, but you could see a bounce. So it's all up to you. All up to you. Let me catch up with chat. CHPT. Let's see. CHPT. I'm covering too many tickers these days. I'm not sure about ChargePoint holdings. Oof. This one's hurting. ChargePoint was the Blink competitor that was having trouble getting off the ground, if I remember correctly. Insider sales. Biden administration leans on Tesla for guidance. ChargePoint in partnership to speed up deployment of EV charging infrastructure. Teamed up with the National Electrical Contractors Association. I don't know how big that organization is, but the collaboration comes as the federal government plans to spend $7.5 billion for highway and community charging, as well as billions more to electrify private and government fleets, ChargePoint said. All right. That doesn't mean that they're partnering with the government, but it means that we are speculating that they might partner with the government if they can win a contract. It's not guaranteed. Also, big inflation is going to put a pinch on spending. So if government contracts don't get locked in for ChargePoint holdings, then that is actually going to be a problem for them, because that seems to be what everybody was banking on, is that ChargePoint would get a government contract to install its chargers in the infrastructure bill. And right now the company's losing money. On the surface, I do think it could probably keep going down, at least for a little while. I don't see any signs of a reversal yet. Let me look at the shorts. 31% on loan. Wow. 31% of the free float is on loan. That's massive. See, oh wow, utilization is totally maxed out. Interesting. All right. So there's a couple of things that I see in the technicals. And failures to deliver are pretty big too. What is the options? All right, they're pretty balanced. Put call ratio is balanced between puts and calls. It looks like it's undecided. Security lending volume is increasing. Shorts are going up. Shares on loan are going up. Days to cover is going up. So basically everything having to do with shorts is getting more expensive, but I still think it could go down in the near term. The only case against that is that you have a symmetrical triangle, or I'm sorry, an ascending triangle here. Let me change the color of this so it's a little bit, ugh.
We've looked at this in the past, I think. I have stuff drawn on it, and
yeah, we did look at this before.
Not been showing any signs of life for a while now.
Yeah.
Seems to be following like this very consistent sine wave that is getting a bit contracted now.
Yeah. What's interesting is that I do see a high amount of volume in it despite all this. So there's interest, but I'm wondering where it's coming from. Wolverine Trading is the designated primary market maker for CHPT. 58% is lit exchange volume, so it doesn't seem like it's being messed with too badly, but 30% of it is going through dark pool trades right now. For the majority of trading, though, like I'm looking back as far as like the last 7 weeks on CHPT, at least 60% of the stock's volume is going to lit exchanges. This seems to be natural behavior. So, yeah, until I see like a clear sign of a breakout and reversal to the upside, I'm not going to jump in on this one. This stock is more likely to suffer because it's tied to the energy sector, which already went on a bull run recently, and now it's getting pummeled in the broader market. So, and ChargePoint right now is they're a growth company. You know, this is not a good environment for growth companies, especially if this is a zombie company that doesn't have a product. It's got a high float. It looks like they're diluting themselves a lot. They're losing money. They're below their estimates. Their net income is like hundreds of millions of dollars down. The technicals.
I mean, they're still a $4 billion company, so it requires quite a bit of money to be moved.
Yeah, I suppose that is true.
Despite the volume histogram on TradingView compared to the float, you only trade about 10% of the float every day.
Mm-hmm.
Which even on the big pops, so where you see that you've gone from $10 to nearly $50, you haven't traded more than 20-30 million out of 170.
Right. Okay. Yeah,
Nice looking chart though.
Just as I thought. Their main source of cash is coming from financing of issuance and retirement of stock. So they have been diluting. They've been diluting a lot. Sale of common and preferred stock. They got $351.18 million from that. They've already blown through it in just the last. They've already blown through it this year. This year, they've already blown through all of that cash that they had on hand just in the last couple of quarters. Yeah. Oh, I see.
It's a bit of a gamma ramp though.
Okay. That's interesting.
Like,
where's the
quite
majority of
steep up to
those?
20.
Let's go get the.
Let me check.
Yeah, let me pull that up. So this is the gamma ramp that Verde is referring to. 15% of the stock would be in the money at the $20 strike. But that's a large move. It has to move by 80% in order to reach that. It could get up to 10% of the float in the money with a move to $15, but that's still like, that's a 20% move. That's a lot to ask of this thing, especially in this current market. If it's heavily weighted towards August, I might be interested, but no, it's all like near term, like YOLO options.
Yeah, you have about 10% of the float by 22nd of this month.
Yeah, that's not happening. I'm sorry.
It has weeklies. You have some interest in August, and then a lot of interest leaps for January 23.
There's no way. There's no institution that's going to carry this thing that far that quickly. Not right now.
The hot point seems to be about $20 strike.
I see,
so that requires like 60-something% move.
Yeah, I see that, but like, yeah, that's a big move for a company with this large of a market cap. CHPT is probably way too much to ask for. Yeah, floor traders are undecided on this thing for the last several weeks. There's money flowing in both directions all over the damn place. Let's see what the chart says. It's pretty balanced. It's, I mean, 60% to the calls, but where's the majority of all that? $13.50. Yeah, the heaviest. It's like slightly out of the money is where most of the premium is at. I'm gonna say no. I'm gonna say no to CHPT, at least for now. It looks like it needs. It's gonna have to go through a little bit of pain yet. It may bounce for a short term ride back up to about 15.50. You could try and ride it for a day trade. That's totally up to you. You could make something off of that, especially if it bounces here at the bottom of this ascending triangle. But I think it's probably going to continue to the downside once it's done completing this pattern. I don't think that it'll break out. It just doesn't seem that likely to me. Okay. Hey, Jake from Steak Farm. Thanks. I didn't know that I was the best, and I don't know what I called, but I'm glad it helped. CT2. Okay. Still consolidating downward. Okay, so this one might spike through again. This isn't decided yet. I want to catch up with this one because I'm actively watching this for a trade. It has not cracked through this liquidity pool yet, but I think it's going to. Okay. The liquidity pool is down at 1485. The line that I am setting myself up for an early alert is at 1510. We've got an hour and 3 minutes left in the trading day. Let's go ahead and catch up with chat. 600 van order from Mullen today. Well, congratulations to Mullen. Is it enough to make them stop barcoding? No. Why would it do that? I'm both thankful that I was able to spot the fraud that was going on with Mullen, but it also upsets me so greatly. Let's see. Tough Built Industries reports. Okay, that's good for Tough Built. I might take a look at it later, but I've been looking at so many different random tickers lately. I can't cover tickers as quickly as like Matt Kors, for instance. He just looks at the technicals and only the technicals. I can't do that. I have to look deeper to make a decision on anything. Okay, BLNK. I am ready. I am ready for you to break out. Complete this inverse head and shoulders, my guy. I'm double checking on the options cost for BLNK right now. All right. Now I like BLNK at least to $18 in the short term for the next Friday calls. Hey, Casual Fool, welcome back to the stream. No, you didn't miss anything good. I've been covering all kinds of tickers. I don't know if you missed the liquidity hunt on T2. It's not quite done yet. They drove it down below 15 cent, but I think they're going to take it back down to 14.85. They're still pulling it down a little bit and haven't chosen a direction. That's the 12 o'clock alarm. All right, that starts power hour. What do you think about BBIG going to a giant shakeout to that 1890 range and then markup after? That's pretty much what I'm targeting. So I've talked about BBIG a little bit. The barcoding down here has been really frustrating, but where I see BBIG turning around is after a liquidity hunt, driving the price down to like when finally they get enough people to dive out of their positions or jump into a week long position, market makers are likely to drive the price down through $1. There's two possibilities that I see here, okay? With BBIG, the whole problem that we're having is that Susquehanna is basically routing all retail orders to dark pools in order to fulfill them in a single block of orders, right? Susquehanna is just like Citadel, Virtu, Wolverine, all market makers that take advantage of their position in the trading system to be able to view our stop loss orders, any limit orders, and all of that stuff. They basically know what we're thinking and what we're trading before we've even decided. The only way that we really throw a wrench in their gears is if we just keep buying no matter what, and right now retail is not deciding on anything. All this barcoding is either retail participants trading to a market maker and letting the market maker fill their orders, or retail is not doing anything and is not actually trading, and this back and forth bullshit is just strictly algorithms, only doing what algorithms do. Hey, Walt Travaria, thank you very much for the $5. I appreciate that. If you want me to cover a ticker or something, just let me know. So there's two things that can happen with BBIG. There's a case where retail doesn't do anything and the price continues to barcode for indefinitely, and all of those options expire out of the money and we're just shit out of luck. The other possibility is that retail continues buying and buying and buying and buying and buying and buying, and then that triggers Susquehanna to take the action of trying to drive the price down suddenly to a shakeout level. And what I'm talking about is liquidity hunt. Spike down below $1 down to the 95-cent area or so. If we see that and then a rapid recovery, then we know that Susquehanna just filled a whole bunch of stop loss orders and everybody can see that they're preparing to take it in the other direction. I say Susquehanna over and over again because Susquehanna is the designated primary market maker, and currently they're actually holding a position in TikTok. They have a 50% stake in ByteDance, which is the company that owns TikTok, and they have they have a direct conflict of interest with BBIG because of low motive. This has been alerted to the exchanges. There's been a lot of letters and stuff sent to them, but it's not guaranteed that any action will be taken, and it's certainly not going to be in time before all of these options that have been purchased go out of the money. So, the way I look at this is BBIG is already at an extremely low price right now, and I know that retail is afraid to get in on it because it's so low, but it's a freaking dollar, man. It's $1.06. There's a huge gamma ramp that's hidden on BBIG. I know that Susquehanna supplied most of those calls. They're probably naked calls, which means that Susquehanna is going to have to buy both the shares for BBIG and the Tide shares that are attached to those calls because they were written before the dividend spinoff, the spinoff dividend. So if retail starts buying right now, key point, the buying needs to hit the lit exchange. So you have to buy from NASDAQ. If you buy from a dark pool or if you just let your order auto route, you're not doing shit. But the order has to go through to the lit exchanges. And the orders have to come in mass. They have to hit the exchanges rapidly. We have to have high volume. And right now we're not getting any of that. It's like garbage volume. There's no volume at all. This is the situation that Susquehanna and other market makers are able to take advantage of because they can just hold the price down and keep the stock's head underwater as long as they want to. Isn't that BS how they turned off the options for the BBIG basket? Just awful, same as Redbox. It's not quite the same as Redbox because those options still exist. They're adjusted now. So the options didn't get turned off on BBIG. The adjusted options were swapped over to adjusted options because they're entitled to Tide shares. So nobody can trade them anymore, but they're still on the chain and it's hidden. And this is one thing that retail isn't paying attention to that we're able to see because we've been tracking the adjusted options where possible. So you can't buy the adjusted options anymore because you can't write them. You can't write an option that's entitled to Tide after the Tide spinoff has already occurred. You can only write options for regular BBIG. But what is bullshit is that the offering to purchase the BBIG 1, that's the adjusted option for BBIG that's entitled to Tide, those prices are way below the market value price of the standard BBIG options. So if you want to buy a regular BBIG option that isn't entitled to Tide, it might cost you $10 a contract. But if you want to sell your Tide entitled BBIG contract, those are only going for $1. So there's a massive imbalance. And this is hyperbolic, by the way. I don't have the numbers right in front of me. But the price difference between standard options versus BBIG 1 Tide entitled options is huge. There's a massive spread between them. But they're functionally the same option. But the ones that are entitled to tide are somehow worth less, even though intrinsically they should have more value since they're entitled to a spin-off dividend. It's bullshit. The only reason why that price is so low is because retail can't purchase them. Retail's not allowed to raise the asking price. We're not allowed to buy them. We can only sell them. We can only move them we can only close the position. And Susquehanna knows this. The market makers know this. Even if it isn't Susquehanna directly, whoever sold those options knows that we can't buy them. So it adds no pressure to those options. Nobody can buy the in the money ones. And as soon as they get sold for like $1 for contract, basically damn near worthless, it gets destroyed. The option goes away forever. And that's what they want. That's what they want. They want those options to just go worthless or get sold back for $1 so that they can destroy it, and it takes the risk off of their books and they make profit. Hey, John, thanks for the $5. Thoughts on Regis? 25 to 35% short interest, 200% cost to borrow, no shares to borrow, up 100% in 1 month. On the threshold list, nobody really talking about it, currently at $1.20. Okay. That could be interesting.
That's ticker symbol RGS.
They are a beauty and health, well, not health, but beauty and makeup and hair products.
I like how it's set up, actually. Yeah, I like this setup. It's moving above its 200 period moving average on the 5-minute chart. And it's got a cross here on the 200 and the 50 coming up here. I like it, actually. That's a good setup. The only thing is that it had this setup once before, and it ended up breaking down. I would like to see it consolidate here in this area for a while. I'll set some alerts on this one and keep an eye on it.
We should ask Dilly about this one.
Has she been paying attention to this one?
Well, just with her profession, she likely has hands-on experience with the products and everything because they're very heavy footprint in salons and stuff.
That's a good point. All right, I'll add it to the watch list for the active plays. I got to get rid of Enjoy. That's gone.
Have you looked at SFT in a while?
SFT? No, I haven't looked at that in a bit. Let me finish some analysis on this one just really quickly. Check out but keep that one penciled in.
Yeah, if you want to see price suppression, look on SFT's chart.
Oh boy, I can't wait. What's max pain for AMC? You know what? Actually, I don't have a max pain chart for AMC. Flabbergang, could we have a max pain chart for our options? Like just like create a bar chart that shows the largest number of puts and calls that expire out of the money and calculate the value of that.
Yeah, he's not in here, but I'll pass on.
Oh, thanks, Verde.
Sorry.
I don't know why I expect Flabbergang to just be hanging out listening to my bullshit all the time.
Fine, we share the same brain. It's alright. The two lonely neurons.
Join the hive. I would like to join the hive mind. All right, so RGS percentage of free float sold short is about 20%. 10 million shares. Shares on loan is lower. Security lending volume is massive. It is on the threshold list, just as you said. It came off the threshold list, though. It came off the threshold list on July the 7th. So it's no longer on threshold. But that's okay. BBIG came on and off the threshold list 7 times since its IPO. It wouldn't be the first time. Utilization is maxed out. This is the first time that it was maxed out, and then it got onto the threshold list immediately. That is interesting. So Redbox did the same thing. Redbox had a similar situation where it started to move up like this. Yeah, big failures to deliver. came onto the threshold list, but it never came off of it, but it happened right after utilization got maxed out. So utilization maxed out happened a couple of times, and it went on the threshold list right away, but its price took some time to go back down, and it had a lot of room to fall. This could be different. It's a very similar setup. I like it. I'm gonna add RGS to the watch list. I'm gonna keep an eye on this one. That is an excellent setup. We will keep an eye on that one. Hey Lazeman, I see your request for APRN. I still don't really like APRN. I don't know why, but I just don't like the brand, so maybe I'm just biased. It's trading below its VWAP. It does look similar to a liquidity hunt. Yes. Yeah, it is. That is a liquidity hunt. Let's see. The spike down happened on the 10-minute time frame, so you're looking for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yep. You have multiple closes above this line within 5 candles. So yeah, it shows the direction it's likely to head back up. That is a liquidity hunt. You did correctly spot a liquidity hunt. And it's getting back above its 200 period moving average right now. So this is actually a good entry point. A lot of bulls will look for this bounce, this close below, and then a bounce back above the 200, and they'll see that as a bullish sign of support, which it is. It is a sign of support. So yeah, and you have a MACD cross also on a positive histogram. Oh wait, no. The MACD is down below it's down below 0. Consolidation may take a while if I'm reading the MACD right. I'm still getting used to reading the MACD. I'm not really, I don't really use it a lot. I like to use the STC indicator actually instead. But you might see consolidation up to about $4.15. So you could be waiting a little while, but it's still a good price. It's a good price, which is if you're willing to hold for a while, then this is a good setup. Interestingly enough, it also looks like it's setting up an inverse head and shoulders. Just looking at these moves here, you would look to see the price bounce off of these levels. I see that inverse head and shoulders starting to show up. So early yet, but an institution would want to get in here. So good call. That is definitely a liquidity hunt. A giant spike through the 200 period moving average kind of gives it away as an additional confluence. I don't always look for that drive through the 200 period average just because like the 200 average is sometimes above it if it's like on a downtrend. But if you're trading on an uptrend like this is, then you can see the liquidity hunt, the liquidity pools a little bit easier by looking at the 200 period average and seeing whenever the price just gets driven through that moving average and the liquidity pool at the same time. That's a good sign that it is a liquidity hunt. And it also is an indication of big support. You'll get a lot of bulls that are willing to buy that when it crosses below the 200 and then jumps back above. A lot of bulls will buy that move. They don't even necessarily like know about liquidity hunting, but they'll see areas of support and they'll see the moving average and they'll just trade the moving average. A lot of people will see the price just hit that 200 period average and they'll be like, I think it's going to go back up, and they'll buy that right away. And they'll treat it like, buy the dip situation. But in this case, you're finding an entry point, which is good. All right, let's go take a look at T2. All right, there it is. Yep, that's confirmation. Okay, T2 is going to move. It got down as far as here. It's not going to revisit that liquidity pool again. We've got 2 big green candles, tall volume or increasing volume. This one looks like it's getting ready to move to the upside. So, okay, that is enough for me. Okay. Let's see, what else do we got here? So T2 is a swing trade. It's not one to stay in forever. Don't know enough about the company. The FDA news is great. It moved down after the FDA news. It wasn't a FDA approval. It was just news that they agreed on a test for their clinical trial. That's good. Means that the FDA is willing to test according to the trial scenarios they've set up. That means that they can begin their testing. So once they announce the trials are beginning, that will be bullish. This will be a short-term swing trade. And we'll just go ahead and we'll do a paper trade. We'll do a paper trade to track this one. I'm going to set my stop loss below the liquidity pool. And I'm going to take a long bet. Let's go see. I want to take this one for a ride. Oh my goodness. All right. So I could see this one making a big move. I think I want to go for a big bet. Let's go see if this thing hits this ridiculous price target. We'll trade it to the next liquidity pool that's up here around the 200 period moving average. And we'll see if this thing chases the 200 on the 2-hour chart. All right. So we're talking about a laser focused entry point, okay? Like super laser focused entry. All right, this is trading at, let's see, it's currently at 50, 15.59. I'm actually going to drop my stop loss a little bit lower because I've got a lot of room here and I want to make sure that this doesn't get hunted, just in case I'm early. All right, we're going to risk. We'll do a 3% risk on the portfolio. That's going to be enough to buy us 16,000 units for $208. We're taking a huge risk to reward ratio of $12 or 12 to risk to reward. That's 12 to 1. So if this works out, then the profit on this would take a $200 bet to $2,500 plus change. It sounds hilarious. It sounds like a hilarious bet, but that is the price that I'm sitting at. All right. Okay, I gotta adjust this because they're taking it away now. Let's go hit the ask. There we go. We're in our position. We have our trades set up. And we have our entry at there we go. All right. There is our entry. And now we're going to watch this play. We'll see what it does. This is a big bet. It's going to take a long time for this to play out. And of course, this is paper trading now, so let's not get too excited. But yeah, this is the way that I would be trading this. Since I'm trading with shares, no options, don't want to take any interest in any options. This is what I'm going for. So in theory, you'd be taking a $200 bet, and you would be looking to take a 2,500% profit. The reason why I feel comfortable taking that bet is because this thing's slammed down all the way to 15 cents. It's way down low. So, and the volume on this thing after this FDA approval is big. So this is going to get some attention, and I expect people to be talking about this. I'm sure that retail will just absolutely love a penny stock because, you know, we just can't help ourselves. God bless us. So there's the play. There is the play. Retail can place options orders for BBIG1 in Schwab. Interesting. So you can open... I just saw this from John Croson in the chat. Could you provide me with like a link to a screenshot, like on Imgur or something? Because I really want to see that. I can't even trade BBIG1 options. I can't. I can't buy them on my broker. They're position close only for me. Dr. D-Face just mentioned in the chat that they're starting to return shares on BBIG. That's not encouraging. I wanted these fuckers to pay for it. You slimy bastards. This is where retail needs to start hitting this thing. The stock is way oversold. Returned shares is 7.3 million. Borrowed shares is 5.35 million. Utilization still maxed out as it's always been. Yep. There is starting to be some significant return of shares. 6 million shares almost in just the last 2 days. There's fraud happening here, guys. This is not financial advice, but all of this lending volume is happening because people have their shares out for lending. They're not buying from the exchanges, and there's not enough buying happening, and Susquehanna is going to fucking get away with it. I'll fight the motherfuckers till the ends of the earth, but there's no way for anybody to stand up to these assholes by themselves. And cost to borrow fee is still going up, though. This is getting expensive for shorts. Oh, I see. No, it took a dive over the last couple days. The put-call ratio is so juicy. 0.11. That means 5 calls for every put. That's frustrating.
Yo, TD.
Hey, what's up, Boule?
Hey, what's up? And what were those tickers that we were playing whenever the hacking was going on?
IRNT.
There you go. Okay, cool. I wanna take a look at that with all that hacking going on right now.
Oh. Yeah, IRNT is one. I also like Cloudflare. That's ticker symbol NET. There's also
expensive one.
Yeah, Cloudflare is kind of expensive. It's $50.
Damn, what CrowdStrike? There it is. CrowdStrike.
Yeah, CrowdStrike. I just love their product in particular because it absolutely whips my ass on penetration tests. Every time I've come up against this product, it kills me instantly. Like anything I try to do, it's like you're a malicious computer. Detonate. It just laser beams the machine that I'm on.
Cloudflare's taking off on a huge candle right now.
What is?
Cloudflare.
Cloudflare.
Yeah, big volume candle.
Really? No kidding. Oh yeah, it is.
Out today quite a bit.
Ooh, that's a liquidity hunt. That's a liquidity hunt, gents. Right there. This thing got knocked down to $48 and then started lifting. And now it's at an entry price. I can't play this one; it's too expensive. But this is a liquidity hunt. If I were to trade this thing, I'd be going long right now. If I were to be trading this thing, I'd be going long. Just be careful. Technical pattern setup is a head and shoulders. Just want to point that out. You have a head and shoulders here. So this can still break down, but I have a feeling the institutions are taking this thing to the upside. This big candle spiking down and then taking it back to the upside. Maybe wait for this to complete and for it to break the head and shoulders pattern by crossing up above the shoulders. But yeah, I honestly, I gotta say I like it. I gotta say I do like it. Cloudflare it's a good platform. They keep the internet safe, which sometimes gets in the way of me doing my job, but what can you do? All right. What other tickers do we have here? Oh, man. Y'all, this is too many tickers. I can't look at all of them. This is why I have analysts. This is why I have analysts, so that I can have like 5 people looking at the same thing, looking at different things. ENDP. Symmetrical triangle. Looks like it's sitting in a consolidation range right now. Not really picking a direction yet. It's in an uptrend, though, on the 15-minute chart, on the hourly. It's below its 200 period moving average. So you want to see it choose a direction by breaking out of this triangle here. So wait for the consolidation to be over with, and wait for the stock to choose a direction, either to the upside or to the downside, before taking a position in the direction that it breaks to. There are liquidity pools down here. So it's possible that if it breaks down, it could be a fake out breakdown. The next pool is all the way up here on the bull side. So I know that this one is being looked at as a squeeze play. I looked at it, and if I remember correctly, they're currently in the process of diluting. They have a outstanding S1 amendment or an S3 amendment. I can't remember which. But I think these guys are probably going to dilute on you. So I'm not jumping in on this one. I may need a fact check, but yeah. Okay. FFIE. I've got a lot of so many requests. I appreciate it, guys. Oh, there goes AMC. All right. FFIE. It's riding the trend on the 20 period moving average on the 1 hour chart. The daily, it's still below the 200, so you need to see it continue to break and test. This pennant does look bullish. Wait for that consolidation to end and take a direction in whichever direction it breaks out to. Okay? All right. AMC. I want to go see what that's doing. AMC.
Oh, AMC's doing stuff.
There she goes. All right, that's
El
the level that I
Capo
was looking for.
handles.
Yep, cup and handle. I see it. That's it. Cup and handle, and that shoulder broke. That is no longer a head and shoulders, my friends. That is a cup and handle. If you are in a position in AMC, good luck. AMC is just looking so damn good these days. All right. Okay, AMC. I'm seeing a possibility of a run between $15 and $18. It's definitely in the realm of possibility within the next 30 days of trading. This kind of move is quite similar to what we saw during this time period, right here in mid-March, just before it went on a nice long tear. I think this was a move that took it to what? It was a 150% move to the upside. It went from $13 to $35. NKLA that Cat called out. Yeah, we can take a look at it. All right, so it seems to have dropped off early on in trading, but it's found some support here, and it's been consolidating nicely. Let me go ahead and add the volume profile on this one. Nice level of buying support right there. That's a good entry point right there. That's strong buying support. I like that on the short-term time frame, especially. On the 1 hour, there's additional selling pressure above it here at 1550. But you can see that it's being held up here at this price level at $5.15. The MACD has also been driven down on this sudden move to the downside. The STC indicator is a little bit red right now, but it's been consolidating at even price action. So honestly, give it a little bit more time to consolidate, but this thing is moving in a range right now, and it is bullish. It just had a little bit of rejection once it broke above this level, and it just broke down during trading hours. But it was a low volume breakdown. It's not nearly as much volume as what carried this thing to the upside here in the last about 8 to 4 trading days ago. All this volume that picked up here on these 4 trading days, way bigger than this move down here. So I'm betting you find some buyers here. I would feel comfortable taking an entry here. obviously do what is right for you. But if you're holding on to NKLA, I'm still bullish, and I would continue to stay bullish as long as it doesn't break down below $4.80, $4.75. Provided it doesn't break down below that level, I think it's got a good shot to carry all the way back up to 650. All right, I see that everything is starting to get volatile going into the closing half an hour of the day. Hey, City Blades, thanks for the $2. Bottom price target for PSEC, general TA on ARDX, if generous. I don't do price targets of any kind, but I can look at PSEC and see what the resistance and support levels are. Right now, you're below a level of resistance right here. It seems like it's getting rejected right now. The thing is, let's see. It's an interesting trading range. I'm not sure which direction it's going to choose, but your support here would be at $6.66, because why not? And $7.90 for resistance to the upside. On a longer term, the stock has been forming, looks like a head and shoulders. Nah, this is it's just ranging. Just really big ranges. What does this company do? They're quite profitable. That was a hell of a year they had. Wow. They had a good year so far. That's pretty impressive. Their technicals say sell, but that's just because it's trading below the 200 moving average. It is about to. Oh, I see it. It's about to make a death cross. You might get quite a bit of selling pressure on that move. Their earnings are so positive, though. Like, they're making money hand over fist right now. It's a business development company that engages in lending to and investing in private businesses. It's also involved in generating current income and long-term capital appreciation through debt and equity investments. Headquartered in New York, New York. Financing companies are, it's a mixed bag right now. I would need to see what this company's portfolio is. It's not something that I have time to do. But this is all going to depend on how solid their customers' debt is with them. They provide financing, so that all depends on how good the financing is for their customers and their ability to pay the debt. If they've put a bunch of money into like zombie companies and stuff, then that would be dangerous for them because they may not get their money, and those companies might declare bankruptcy. That'll be bad all around if they start defaulting. That'll really cut into their profit, and you might see some bad pressure from that. Overall, though, if the company is like materially healthy in terms of its finances, then it could be good. I see that they IPO'd in 2004. It's been around a long time. Given the climate, given the way that finance is doing right now, I would probably say that PSEC is going to probably see some downside, especially with that death cross coming on the daily chart. But you do have a golden cross almost ready to be made on the weekly. So weigh your pros and cons, man. This one is very difficult for me to choose any kind of price target. I wouldn't feel comfortable making a judgment on this one. It seems very much range bound. If you're day trading it, then, well, you should know how to set your own price targets. All right, ARDX. People have been screaming about ARDX. Oh my goodness. Oh my goodness. This thing got rug pulled hard. They're losing money like crazy. Just losing money hand over fist. 137 share float. Yep, losing money hand over fist. They're a $95 million market cap company, and they're losing at least $90 million every year. That's not a good sign. And they're doing worse now than ever. Financials, what are these? Are these guys a zombie company? Yeah. Issuance of stock, financing and cash flow from other sources. Air quotes, that means debt. Their balance sheet, their total liabilities outweigh their assets. Oh wait, hold on. All right, so their asset, they do have a looks like a 2.2 to 1 debt to asset ratio. Their shareholder equity is what's propping them up. They have $45 million of debt. I don't know what is up with the company and why they're not making money. Operating expenses, research and development, and general expenses. Well, their operating income is just not great. Okay, that gives me enough of a financial picture of the company. I have no idea what caused them to just lose. What the hell? 75% overnight. This was in July of last year. On the 22nd of July. I don't know what happened to this company. ARDX plummets in pre-market after FDA finds deficiencies in new drug application for canapanor kidney treatment. Okay. Finance company going into a recession. I don't like it, man. I really don't. If it's heavily shorted, then it probably deserves to be at this point ARDX. I don't like it. It's in the wrong sector going into this environment, and it looks like they're losing money like crazy. Their short interest isn't even that extreme. Oh, whoops. Just in, the euro has hit a 20-year low of $1.45 against the US dollar. That's wild.
So now's the time to buy some euros then, yeah?
Yeah, especially if the dollar's in bad shape, which I do think it is. Honestly, if I was buying any currency, it would be US dollar to JPY. The Japanese yen is strong right now. Look at this monster. If I were in Forex, it would be yen. Yen is moving like a monster right now. Hey, General Disarray says, thanks, TD. I got 5.5 calls for 722 on NKLA. Oh, no problem, dude. Good luck on those. I'm patiently waiting to see what Nkla does. I'm feeling pretty good about it. Cat does not bring me bad plays. He always brings me really good plays. He knows how to pick the unusual snails. They move slowly, but they move consistently. Is Evfm done? I don't know. Evfm, I remember looking at this earlier. It looks like it's getting punished pretty badly. Wow, this happened in just the last 30 minutes. What the? Ooh, wow. the volume is getting just, the volume's small compared to what it was doing, but it's getting smashed. It's almost like a liquidity hunt, but there's no previous support here. Like there's no liquidity pool for this to dip into. This looks like a breakdown. I hate to say it, but it does look like it's coming down. This does look like a breakdown to me. Yeah, it chose a direction and it chose death. EVFM does not look healthy. I don't even know what's going on with this company, to be honest with you. You might want to... You might consider selling, but there's volume turning it around here, so maybe it's about to bounce. I don't know. This is a previous area of support, or it was resistance that became support after it broke through, but it needs to turn around quick. I don't know what the story is with this stock, to be perfectly honest with you. It hasn't really broken down all that much from where it started. Because, like, consider that this thing went from 30 cents to $1.58. That's a big move. This could all just be part of consolidation. Like, this is a long-term, or this is a short-term downturn on a much longer term move. Like, it could be over, but at the same time, like, these moves to the downside, they happen. Especially after a stock has had this much of a rip. Like, this thing went cruising for a while. It looks like it's finding support right now, so don't panic. It doesn't look healthy, though. Your bailout point here is this 50 period, the 50 period moving average. If it breaks down and closes the day below the 50 period moving average, this thing is not doing well. At the moment, though, it looks like it's a part of a much larger ascending triangle. So just hold off, all right? Like, don't panic. If it bounces off of the 50 or the bottom of this ascending triangle, then you're fine. And you could even, like, consider averaging down the position and riding it back up to the top, doing a little bit of day trading here and there. But look for confirmation candles, okay? Look to see if it either closes below the 50 moving average. This is a smooth moving average, 50 period on the 2-hour chart. On the 1 hour, you can already see it's below it, so that's not a valid support to look for. You've broken down below that on the 1 hour. I'm going to be looking at the 2 hour. That 50 will act as support. GMVD, I looked at that one already. Oh, I see. That's why we're looking at GMVD. Thanks, Flinster. Wow. All right. Yeah, definitely a breakout on GMVD. If you're in it, congratulations. Is the spy dumping too? I wouldn't say dumping, but it is trending down again. That 20 is crossing below the 200 period moving average on the 10-minute chart, which I like. SPY got rejected at its 200 period moving average on the 1 hour chart, and on the daily, the SPY, the death cross happened. The SPY death cross happened today. I didn't even notice. The SPY made its death cross. Oh. Not financial advice, not financial advice, not financial advice, but oh my God, the market is in trouble. News is going to be chirping about this all week. This is not good. SPY is in trouble. The 50 crossing below the 200 period moving average is a bad sign I want to give you a statistical truth of history on the S&P market. No S&P or Dow index has ever survived a death cross of the 50 and 200 period moving averages. When this happens, it means a crash at least down to 50% from its peak. It has happened every single time, all the way back to the market crash of 1929 and every crash since. Every time the market index has ever had a death cross of the 50 and the 200 on the daily chart, it has caused a capitulation style crash. I mean, major spike to the downside. Doesn't mean that it will happen now. It doesn't mean it'll happen a month from now. It could take more than a year, but it does indicate that it will happen. This has happened many times in the market. 1929, the second mini depression of the 30s, the twin crashes in the 1970s, 2008, the dot-com bubble, every single one. Oh, and the 1987, although it was actually, that was kind of a fluke. But still, all of them, death cross. Death cross on the S&P and the Dow. I actually want to check the Dow now. DJI. Let me see the Dow Industrial. Yep. Death cross on the Dow. Yep. A death cross occurs on the daily. At least for these long-term big ETFs and indexes, you want to look at daily to answer your question, Snipes. Okay. Yes, I have lots and lots and lots of bearish positions on the market. Let me here. I'll bring up SPY, or actually let me bring up SPX so that we can see the broader market index. But this is it. This is the death cross. This right here. The green line is the 50 period moving average and the red is the 200, and I'm on a daily time frame. This is the death cross. It happened today. SPY closes red. It's a death cross. Honestly, honestly, I want more puts. I wish I could get more puts. I do want more puts, but I cannot afford puts. SPY is expensive. You could try getting SPXS or SPXU, which is an inverse leveraged ETF. Going long on those ETFs is a bet against the broader market. You can also do things like SDAO. SDAO is another one. But yeah, I just became hyper bearish on the market. Puts on the American dream, everybody. I'm not looking forward to this though. Like this is a really bad sign for the market. News is going to be talking about this, and it's going to make headlines. Death crosses on the S&P is a bad thing. I wonder what Ultra Pro on the Dow is like. It's a little bit expensive, honestly. I think I'll just stick with SPXS. The SQs is another one. If you are if you're bearish on the Nasdaq, then normally people bet bullish on Qs. That's QQQ. That's a ETF that tracks the NASDAQ exchange index. I think it tracks the basket of the top 100 companies on NASDAQ. But anyway, NASDAQ's highly speculative, very high beta stock, so it's very volatile. And because the NASDAQ is so volatile and it's full of zombie companies, like a record number of zombie companies, any downside move to it can cause a contagion effect, which is where you have a bunch of other zombie companies, even though nothing else as bad is going on with them. They're tied to each other through these ETFs, and it can cause all of them to lose shares in their stock. So this contagion effect can affect the short Qs and the Qs. The Qs is bullish, the short Qs is bearish. So if you go long on SQs, that's a bearish bet against the NASDAQ. I hope I explained that well in a way that's not super confusing, but yeah, I would be really, really, really bearish on the SPY right now and NASDAQ as well. I have some strong feelings about the NASDAQ just vomiting all over itself next week. Oh, man. Oh, man, oh, man, oh, man. Well, we'll see how it reacts tomorrow. This is it, man. Got a few seconds left in the market. 35 seconds left to take your bets. This is going to be a rough day tomorrow in the market. Can we... Clint, don't make me kick you out of my Discord, you naughty, naughty boy. That is disgusting. Oh, man. All right. So we've got a lot of things going on. Tattoo or TTOO, that's T2 Biosystems. FDA notices and a new clinical trial going in the works for them. They got approved to start their phase 3 with FDA, so they have situations lined up. And ding, 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 that's the bell. We've got GameStop setting up for another run. We've got AMC and GMVD all setting up for new runs. Blink charging, I saw this one forming an inverse head and shoulders, looking really nice. I'm thinking that this one could make a rip at least to $18. Let's get AMC up here. AMC just absolutely ripping it up, man. I'm excited. It's consolidating here in this triangle. It's a symmetrical triangle on AMC here on the 15-minute. But it's a very nice setup. Very nice setup. I am going to wait for AMC to cross 14.95 for confirmation, but we may see that in after hours, you know. Tesla, we were looking at for a reversal. It's now since broken down. So it looks like Tesla is going to continue its trip to the downside. The price that I would be looking to pick up any shares or calls would be around $670 to $680, depending on where it hits this ascending triangle at. If you're looking for this ascending triangle, you can see it pretty quickly on the 1-hour chart. Okay, and I do have after hours session turned on for this. I do listen to your conversations when none of you realize. You never know who I truly am when I'm just sitting here listening and policing you all in the background in my burner account that you don't know exists.
Dun, dun, dun.
I know how you degenerates talk to each other. You say nice things about me though, so I'll forgive you. Once.
ATD, one of your trading view alerts came on for AMC right now.
That was because it crossed 95.
Yeah, 14.95.
Yep. All right.
I was gonna get Tesla, man, but I went ahead and jumped on some AMC 15s.
Hey, get it, dude. I think that AMC is getting ready to go on for a run. Tesla, I think, is breaking down anyway. So you took profit on that, right?
Yeah, I took out, man. I got out $12.
Ah, there you go. You made the right call. Look at that. It ripped. You got a nice pop on it. Managed to take some profit. I mean, you could go short on it, or you can go to AMC. You know, the real winner.
Yeah, I seen that cup and handle for me, man. I was like, you know, I'm not
Mm.
jumping down. That one looks a little bit more promising than
Yep.
putting some more
Yep.
Tesla at 690 or 700.
Right on. I'm looking at SPXS, and man, I'm pumped right now. I also was checking the VIX, which I don't normally do, but the VIX looks like it is. The VIX looks like it just double bottomed, and I think that it's going to. I think that it's going to go parabolic again here. For those of you that don't know about the VIX is the fear index or the volatility index. Most people know it as the fear index. Whenever the VIX goes crazy like this, like these giant spikes, it's because the market dumped. That's how you know a market dump is happening. See, the SPX took this nosedive here. VIX went nuts, right? 500% gain in 28 days. Just crazy, right? So that was the COVID crash, if you were paying attention. But anyway, yeah, VIX you can trade options on, betting on volatility. Basically, if you think that the SPY is going to dump in the next, month or whatever, you can get some options to bet on that move. And I've never taken a trade on the VIX. I've never traded the VIX ever, but it's a good indicator to let you know when fear is taking hold. And the VIX has been climbing ever upward lately. I recently saw some technical analysis on this saying that if the VIX closed below on this ascending on this ascending triangle, then it would mean that it's going to break down. But it gapped back up and went straight back to where it was. So I don't think that it's wise to trade technical patterns on the VIX itself. I use it more like just an indicator of how afraid everybody is that the market is going to, take an absolute dookie on everything. Hey guys, yeah, I don't accept DMs on Twitter or Discord. I do that just because I literally get hundreds of messages a day, and most of them is from spammers. I just have it turned off, so it's nothing personal. You can message me on Twitter and just like at me, and I'll usually see it. I check my Twitter pretty frequently. If you want to talk to me on Discord, just at me on Discord. Just throw me a mention on the Discord channel, and I'll get to you guys. I pay attention to all that stuff. I'm always available. I don't always respond right away, but I'm always there. I will get to you.
Hey, check out Nkla.
What's it doing? Nkla. Oh, dude, you got me all hyped up for no reason.
So it's doing that rebalancing thing.
Yeah.
Palantir, SPY, a bunch of them are doing it.
I see it. The giant hammer candle.
They're doing that crazy after hours BS.
Okay.
Downside.
Okay. I understand what you're saying. Okay, yeah. All right. So they're all right. I thought that you guys were like telling me that it was like going nuts to like $5.50. I was about to get excited.
Mine is still at 543.
Come again?
Mine is still at 543. It hasn't.
Yeah, there was one share purchased at 524 past for 543.
Interesting.
Yeah, Palantir and Lucid are doing the same thing. It's annoying.
Look at AMC how it's got the one going down. That balancing
Yeah,
act.
saw too.
Crazy balancing act.
I'm not getting these. I'm not getting these prints. Are they on your trading views? I don't see them.
I've got one on TradingView. I think you got to switch between a couple of different time frames, or else it comes up as a doji.
There's one at market close.
There's Weeble. Check out Weeble.
All right. I haven't looked at Weeble
Nkla,
in forever.
IRNT, they all got that same.
Why don't you guys just send me a screenshot and I can show it on screen? Somebody was asking me about. Somebody was asking me about why they don't see a death cross. I'm not going to jump to everybody's specific request, but if you're looking for a death cross on SPX or the SPY or the Dow, you need to set your time frame to daily. Make sure you're using smooth moving averages, and make sure your moving averages are showing a 50 period and a 200 period. The death cross will be there. I promise you. I used smoothed moving averages. These are slightly different from simple moving averages. But it's pretty close. CPI data this week. It can recover the 50. What can recover the 50? I'm not sure what you mean. But yes, the CPI data I'm very much looking forward to seeing. Okay. All right, I got JRuff's. Oh, okay. Yeah, that's a bit weird. All right, so these are the prints that JRuff was talking about. All right, so Lucid did it. SPY did it. I don't know why we only see this on Webull. I think it has to do with Apex clearing. I'm convinced that it has everything to do with Apex. All right, so Palantir and Nkla did it, and SPY and Lucid did it. Wow, that's funny. That's hilarious, actually. These are weird prints. They usually signal volatility the next day. Have we decided if it means a move to the upside when it's green or a downside when it's green? Like, does it matter?
That's a good point. We should definitely look into that.
Like, you guys should cross-reference it and go back and see whenever this big print happened. I feel like it's just Apex dicking around because they can't clear their trades properly. Because it only happens on Apex-cleared brokerages, at least as far as I can see. I never see it on TradingView.
I don't know, but Mara and IRNTs kind of look official.
All right. Well, let's see. What else do we have here? Got a work request. Hold on. Sorry. And I go and type like a machine gun here for a second. Okay. I had to take care of somebody's request at work real quick. I'm not going to lie. I really am kind of expecting the VIX to just suddenly go bananas tomorrow, and we'll see the market down like 200 points. Tesla is looking unhealthy. This actually makes me happy because I would like to go long on Tesla while they're below $680. See, what else do we have? There's been so many tickers that everybody was just throwing at me in a barrage. Hey, Mad Soper. Simple and EMA averages, they're just a different way of calculating the averages. It depends on your trading style. You got to figure out what you like. I use smooth moving averages or simple moving averages for the most part. EMAs are good for day trading because they're more volatile and they place heavier weight on recent price action. So the most recent candle has the greatest effect on the EMA. So it's a very reactive moving average. Hence why it's called the exponential moving average. But if you're not familiar with those moving averages, I might suggest come to the YouTube channel and check out our trading school playlist. The trading school playlist, actually, we did a class that was conducted by Flabbergank, one of our analysts, and he teaches people how to use moving averages and MACD and EMAs as a part of day trading strategies. So you give that a try. If you're not familiar with these, it's a good idea to know moving averages. Even if you don't trade based on them, it's very important to use moving averages so that you know how to trade with the trend. Okay. All right. I see that Vinco barcoded throughout the entire day, and like always, it's just going bananas in after hours on low volume for no reason at all. Exella is probably not doing anything, is it? Yep, Excella's still not doing anything. Just barcoding. Well, it's at least barcoding less than it was for the last few days. It was barcoding like crazy here on the 7th. BBIG is the one, though, that I feel is going to have to make a move soon first. Okay, let me go ahead and see what other tickers we have from everybody else. If you guys, again, I've got time for 2 more. I have time for 2 more. DRV is good if SPY drops. Yes, more than likely, if the SPY starts tanking, DRV will go up. EVMF, I already covered that one. We've covered this one like 3 times now. Or EVFM, I assume is the one that you meant. Okay, it looks like it bounced at the end of the day. See where it opens up tomorrow. If it opens below, it should retake this triangle. If it retakes this triangle, that's bullish, and it's likely to start moving back up towards the top of the triangle. Just a few technicals. That's about it. If you want more, there's plenty of due diligence on it from a couple hours ago. Did GMVD finish above the 200 moving average? That's a good question. I actually didn't look to see if it did. Yes, it closed above the 200 moving average on the hourly. On the daily, it's nowhere near the 200 moving average. The 200 on the daily is way up here at $2. GMVD is looking nice. This pop in pre-market today was money, dude. As it also happens, Cadude was calling this one out. He was saying, "Hey, this one looks pretty good to me." I'm like, "Hey, we're already in it." so we both seem to be on the same page with GMVD. If I'm not mistaken, Hoop Money did an interview with the CEO. I'm not sure if was it a second interview. I don't know if anybody else watches Hoop Money. I don't have time to track everybody's YouTube videos. Everyone's putting out like 5 hours of content a day. And I am just one guy. Contrary to popular belief, I'm not a computer.
So there's still a positive sentiment on GMVD?
Yes. Generally, there's positive sentiment on GMVD. The move to the upside today, it was a slow roll to the upside today. The volume was a little bit lower, but Friday we had that big volume pop, and it went on a run for about, I think it was like a 20%, 23, 25, 28% move. So GMVD had a really nice close on Friday, and it continued moving in after hours, and now it's continued that momentum here today. That's excellent news. And on the hourly chart, you have a cross of the 50 period and the 200 period moving average in after hours, which is great. Seeing the 200 period moving average, seeing a golden cross on the hour chart is good enough for me to confirm a reversal at this current price level. GMVD is way oversold, and it IPO'd very recently. If this stock can get back above a dollar and get off the NASDAQ shit list, that is the delisting list, then I think that this thing can make another move to the upside. This one was being heavily manipulated by market makers. The short exempts in this one were absurd. Let me actually go pull back up. Yeah, let me go pull back up the inspect on GMVD and look at the dates since June. We're probably not going to get a print today for the short exempts because that data usually comes out about an hour after close. Okay. Here is the GMVD short exempt data. The stuff that really matters is looking at the closing price to see the trend that it's in and where the short exempts are at. Every time this thing was on a uptrend, it got smashed by short exempts, but this one's rapidly overtaking its previous price action. It's already back up above. It closed above 93 cents today, so that's an excellent sign for this one. I'm interested to see where the short exempts are at currently. I gotta also look at Ortex.
Big boom candle on GameStop and a little one on AMC in after hours.
Nice. See, GMVD. Yep, shorts are starting to climb. I knew it. There it is. There we go. And the utilization just tapped 100% today. Okay. Free float on loan at 7.6%, which isn't all that much. And there's probably going to be more shares available for them to pull shorts out with. But the security lending volume is already spiking pretty dang high. Failures to deliver spiked massively on the last day that they were reported. So that gives us a clue that this stock is having difficulty, or market makers are having difficulty delivering shares. Cost to borrow has been about the same cost since the price went on a run from $1.60 up to an all-time high of $6.73. More borrowing is happening each day, so consistently a lot more borrowing. I like this interface that I'm starting to like this interface that Ortex has. It's showing the actual time frame and the amount of borrowing that's taking place throughout the day. This is an excellent change. I really like this. The cost to borrow average came down a little bit, but the cost to borrow maximum rose a bit. So GMVD still getting messed with, but we're in early. We're very early to this play. This is an excellent start. So excited. Okay. With ATER, I mean, you're bouncing off of support. It's the same situation with BBIG. BBIG is down at its support level. ATER is at its support level. It's like that last line, you know? It's like that floor is like made out of concrete. It's going to be difficult to drive it through. Even for big market makers, it's going to be tough for them to drive the price through that level. Moving average on Webull shows that the 50 and 200 crossed on 317. Why are we so inconsistent on moving averages for the SPY? No matter how I look at this, the SPY is doing a death cross now. I don't know why everybody is having the same problem. Can I get confirmation from somebody else in the trading floor to make sure I'm not an idiot? Like, the death cross on SPY happened today, right? Please let me know if I'm an idiot. J Ruff, I volunteer you. Tell me if I'm an idiot.
I'm pulling it up now.
Like, am I dumb? Am I using the wrong moving averages for this?
What was the red line that I was just looking at on your screen? I don't think that's the 200.
That is the 200. That was my 200. So if I pull up SMA, these are the 5 moving averages in one indicator. It looks like a spaghetti mess. I'm going to move it to the daily time frame. What the?
So on the daily, I've got the 50 and the 200 crossing on March 14th.
Okay, yeah, I see it too. What is so different about my moving averages? I was using smooth moving averages. How could they be that different from simple moving averages?
That was the. I think I have that SMA by KGS. I think that's the one I have on my trading view too. Yeah.
Interesting. Maybe I'm stupid. I guess I've been using the wrong moving averages for that. Well, all right. So it was a death cross for smooth moving averages versus simple moving averages. Now I'm going to have to look it up because now I need to know why I was so off on this, because I've been using smooth moving averages for a long time.
Yeah, I wish we could get back to that other screen that you were looking at before you fixed it. I want to see where that was.
That would have been here. It's the green line and the 200. And this is just using This is using the ARDI or the Phoenix 1.0. It is using smooth moving averages. I can switch to using simple moving averages. Okay, and I see that that makes quite a drastic change. Yeah, and now I get the 14, the cross on the 14. Interesting. I need to look up the difference between smooth moving averages and simple moving averages now, so that I know why. A smooth moving average is an exponential moving average, only with a longer time period applied. The smooth moving average gives the recent prices an equal weighting to historic ones. The calculation does not refer to a fixed period, but rather takes all available data into account. This is achieved by subtracting yesterday's smooth moving average from today's price. Adding this result to yesterday's smooth moving average results in today's moving average. Okay, so it's taking into account all the data, like all of it. That's why. Okay. That changes a lot of things for me. I have been using smooth moving averages for a long time. I was under the impression that it kind of equalized the moving averages so that they didn't jump around at such extremes. But I can see that it does that to a bit of an extreme level such that it makes it more of a lagging indicator. So then let's look at GMVD. GMVD. So what do the moving averages look like on this if I use simple moving averages? Well, it's still nowhere near the 200 on the daily. Did close above the 200, but I see that we have a golden cross. Interesting. All right. So this is interesting. I'm going to have to start looking at these a bit differently now.
Can you do me a favor? Can you pop up that options menu again?
Yeah, sure. Is that what you wanted to see?
Yeah, why does the width go to 2 for the 200?
Oh, that's just the thickness of the line.
Oh, okay.
That just makes it easier for me to see.
Oh, that's wild. Oh, all right. Thank you. Sorry.
Yeah, no problem. That tells me quite a bit about my the way that I've been reading the charts. It's not necessarily a wrong way to read the charts. It's a different way of reading it. But I was under a mistaken impression of how smooth moving averages were calculated versus simple moving averages. And that kind of leaves me inclined to use simple moving averages instead rather than smooth ones. I like smooth ones because it keeps the trend more, well, smooth. But it also doesn't capture the volatile movement, and it can create an even more of a lagging indicator. Like this, for example, when I saw this price action here, this, if I were to change this back to a smooth moving average, I guarantee you that these moving averages never would have gotten so close to the 200. Just based off of that new information. Let me switch this. We're learning things today.
That would have been real smooth.
Yeah, look at that.
It wouldn't have moved down enough in order to be able to come up to it.
Yep, the 200 moved away, and the 50 and the 20 moved away also. Interesting. Okay, that's very interesting. I think let me try exponential. Okay. I think
that switches stuff even more.
Yeah. You know what? I think I'm going to try using exponentials because I know exponentials I know how exponentials work a little bit better. I feel like it's more volatile and more reactive, so you can get tricked into taking positions early this way. But I'm really just looking at the moving averages to detect a trend and not trusting them to tell me when a trend reversal is occurring. For the trend reversals, I look to see where the volume is, where support is, and where price action is the heaviest. Like here, the volume down here, when the price on GMVD hit down to its all-time low of 32 cents, the very next day, the price just went ballistic, and the volume was huge. 15 million shares traded in a single hour. That's big. So I think I'll use the exponential moving averages with my ARDI indicators for a while and see how that does. I've been using smooth moving averages for a while now. I was getting used to them, but now after learning this, I see that it's a bit more of a lagging indicator than what I want. So I think I'll stick to the exponentials. I would rather have a more reactive indicator and be cautious than to take a massively lagging indicator and never see the signals in the first place. I would rather be able to like make that judgment call for myself with my my human brain and decide if a cross is worth trading or not. But for GMVD, I would say that this cross is definitely worth trading because the volatility is really in favor of it. It got rejected here and the cross never occurred, but it consolidated so nicely. So this cross here, I would definitely be trading this. Evfm pushing back up. See, what did I tell you? Evfm in after hours. Got to pull that after hours up. There we go. I'm on the wrong chart right now. Let me go back to my Devil's Terminal. Evfm. There we go. Bounced right off of my line. How do you like that? What did I say? That support at $1.10 was exactly what it needed. We'll see how it reacts tomorrow. Don't get too excited just because the after hour bounce happened. It can still close open, or it can still open down tomorrow. But this is a good sign, at least. It's a weak sign, but it's a sign. What other stuff do we have? We got Regis.
I just posted a couple links and stuff inside Livestream chat for you. It looks like the pop for GameStop. A couple other people called this out a couple minutes ago. But the NFT marketplace went live.
Oh, no kidding. Ah, cool. That's neat. Well, that's a good case for GameStop. I'm not into NFTs personally. It's not my thing, but I know a lot of people like it. Trading NFTs is good, clean fun. Good, clean gambling fun.
I love the potential future application of these.
Thank you, Captain Insano, our resident news ticker. Breaking news: White House spokeswoman Jean-Pierre. I expect new CPI data to be highly elevated. Oh, so do I. So do I. Ooh, that's nasty. All right. I actually need to look at US CPI. What was the other? There's another index. I need to turn off this HTF liquidity while I'm looking at this. There's another index. Isn't it like PPE? What is the economic inflation? Is PPC? God, I can't remember what it's called. There's an index similar to the PCI index that was being referred to for tracking inflation, and it shows a very different story than what the CPI index shows. CPE. Oh, if that's a ticker, if that's a ticker, Josh, then I'm not gonna take any more tickers. I don't have the time to dive into any more right now. Hey, Jack Daniel, I'm sorry if I scared the shit out of you. I hope that wasn't an emotional decision. I'm not. It's not my goal to scare people, and I don't want to put people into a position of I don't want to make people just leap out emotionally of their long-term holds. That's not how you should trade. Just because I think that a crash is coming, you should really carefully analyze what your you should really carefully analyze what your stock holding sectors are, how those sectors have performed during previous crashes, and also understand that we're in a different environment than we were in the last crash. It's both a housing crash and we have a major inflation crisis going on. So there's not a lot of safe places to hide, but don't just I don't want anybody to just sell everything, just panic selling because you don't know what else to do. That's not the way to trade. PPI, Investment Managers Astoria Inflation Sensitive ETF. Well, that's an ETF. That's not exactly what I want. And it also has no historic data. That's not going to work. Producer Price Index. Okay. It's a lot of stuff. It's a lot of stuff. We'll do all commodities. That'll probably give us a decent idea. Oh yeah, that actually shows it quite nicely. Thank you. That's actually, yep, that's exactly what I was looking for. Thank you. Thank you. Who said that? JMR Photographic. Thank you. Appreciate it. So yeah, the PPE or the PPI. That's the consumer. Let's see the God, what is it called? I'm trying to get the names of all of these indices right. I'm getting all confused. Oh well. Well, anyway, the CPI index has been fundamentally different from how it tracks inflation for the last, I don't know, 20 years. They changed the way that the CPI tracks inflation ever since about the year 2000. They started toying around with the weighting system and how they measure the prices of commodities and goods used by consumers. And one of the biggest problems that I have with the consumer price index is that they're allowed to substitute things. So, you can substitute sugar for stevia because it's a equivalent functioning commodity as a sweetener. But the price of sugar might be $2, whereas stevia could be 10 cents. But they'll take the price of stevia into account when weighing this consumer price index. And that I have a problem with because that isn't that's not universal, right? You can't just do that. So the sky is not falling. No, I still think the sky is falling, but it's just going to take a while. I've been talking about a crash for a while. I still think that the SPY is going to come down, but I just, guys, don't trade just because I make a decision about where I think the market's going to go. This channel is not about telling you how to trade just because I trade a certain way. This channel is to teach people how to trade for themselves. Like the last thing that I want this thing to be is like, True Demon's buying stock XYZ. Everybody buy it. Like that's not what I'm here to do. That's just pumping and dumping stock tickers. I'm not here for that. I'm here to try to educate and teach people how to hunt for themselves. That's it. Like I'm not going to sensationalize things, but I do want people to be aware of the macroeconomic events that are going on around us, and I do think that our market is in serious trouble right now. So I am very bearish on the market. If you want my reasons for why I am bearish on it, check out some of the videos on my channel. There's a lot of them at this point. I've gotten like 6 other videos going on that talk about all the reasons why I think the market is about to crash. You can go ahead and take a look at those. But don't just blindly make decisions on your portfolio because I say the market's crashing. That's a bad choice. You should understand why I think the market is crashing, and you should decide for yourself, do I agree with his thesis? Do I disagree with his thesis? Does his portfolio line up with mine? His risk is different than mine. Understand all these things, okay? My risk is different than yours. My portfolio is different than yours. My situation is different than yours. You should trade according to your life situation, not mine. Okay.
Hey, just if you wanted to be aware, EVFM took a pop off that support level that you were looking at earlier in after hours.
Yeah, I was calling it out a second ago. Did it go? Did it go even further?
Bad.
You're good.
Oh yeah, it's up to like 1.2 now. It's still pushing.
I knew it. I need to get rid of the PPI.
Sorry, I must have missed whatever you called it out. I was reading through trying.
Oh yeah, it's gone up way higher since I said something. Yeah, I called it out like in the first 5 minutes of close, and it bounced. Oh wow, look at it go! Yay! So if EVFM opens up at 150, then you can say that True Demon said so.
Tell people all the time that you say things anyway.
Mm-hmm. Like second mortgage on LMNOP. Shout out to Captain Insano. I am all in $10,000 on LMNOP. I took a second mortgage out on my vacation shanty in the middle of the ocean. Wow, EVFM is really pushing.
2 points, what, 1.27 now?
Wow. Yeah. There you go. A 16% rip in the first hour in after hours trading.
They would wait till after hours to send it off of the support level.
They would. Oh, and there's the rug pull candle. Kill candle.
You can't get your options. You can't do anything.
Right. That's how the game is played. And there's no reason why you couldn't trade options in after hours, but honestly, who wants to be trading for 12 hours a day? Honestly, if I
would lowering my head.
Look, if I could just switch over to using algos and making like a few $100 a day on Forex trades, then I would just do that. I do this YouTube stuff because I'm having fun. I'm having fun, and it's helpful. I feel like it's helpful to teach people how to trade and show people how to look at the data in a different way. But if I were doing this just to make money, like I wouldn't share my knowledge with all of y'all. Why would I do that? I could just trade all of my genius ideas by myself.
You like the sweet sultry sound of Boule and J-Ruff's voice. Don't lie.
I like listening to you guys pull the lever on the slot machine every day, and that's what I like listening to. Oh man. All right. I've been streaming here for the last 4.5 hours now. We had a good day. It was a really good day. It's nice to see AMC starting the week strong. Nice to see GameStop, EVFM pushing in the after hours. TTOO is It bounced off of our liquidity pool, so I like the look of that. We'll see. We'll see how this thing concludes in the last. We'll see how this thing concludes over the course of the next week. But that's going to have to be it from me. Thank you guys so much for tuning in to watch the stream. If you want to see more of this stuff, please consider subscribing and leave a like on the video just so that you can make sure that the YouTube algorithm loves us just a little bit extra. And if you want to be a part of the conversation on the daily, even when I'm not streaming, you can join us on our Discord, which you can find at discord.gg/Hell's Trading Floor by signing up to our Patreon at patreon.com/thedevilsbroker. Thank you guys so much for watching. I'll look forward to seeing you tomorrow at the bell.
Peace out.
Later.